following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.
Good morning, everybody. Welcome to Ninjatrader Live. My name is Jim Cagnina. It's April 8th, 2024. Happy Monday. Joining me live today, as usual, Tom Schneider, CMT. Good morning, Tom. How are you?
I am doing very well, Jim. Good morning. Welcome back. We missed you on Friday, but it's like you never were gone. You're right back in step.
Well, I was out of pocket for, this weekend. And I understand there was in my absence, there was a earthquake.
Well, there was a small tremor. Yes. We got through it though. No damage, no nothing really. Just a little bit of surprise on our faces. It was good.
All right. So the building didn't topple over and it was all good.
No, we're all set here.
All right, that's good news. I came back. I landed back in Charleston area Sunday, just in time for another tremor. The Lady Gamecocks, South Carolina national champions. It was an awesome game.
Yeah, I got to watch a little bit of it. And, it's funny to see all the all the hype throughout the tournament was on, of course, Iowa. And then to see the Gamecocks win, it was pretty exciting.
It was, and the coach, the South Carolina coach was very classy in her, in her comments at the end of the game. It was just a great experience.
And we'll do it again tonight, right? We have another game, another final game. March Madness ends tonight, so I know I'll be watching. It's late though. Did you see how late it is?
No, what time?
I think it's 9:07.
Oh my gosh.
I think it's 9:07. Yeah, it's late, right? So I might watch the first half and then figure it out tomorrow.
Way past my bedtime.
Right.
Does everybody hate UConn or is it just me?
My son picked UConn to go. Matthew wants to go to UConn, so.
Oh, no, that changes everything. Now I got to start rooting for him. Oh my gosh. Oh, anyway, a lot of stuff to talk about today, Tom, including the Bitcoin halving. And well, let's get right to it. Let's check out the E-mini S&P. We're going to start off this segment with my Commitment to Trader charts, right? It's a special workspace that I created on the Ninjatrader platform. And I have some Commitment to Trader data on here. I have an RSI down here at the bottom, and I have an open interest on a daily candle chart. We're taking a look at the E-mini S&P, Tom. What are you thinking?
Well, I mean, it looks like it's behaving like it has been for the entire year, right? A little bit of a pullback in an uptrend, although the pullback, it's gone a little bit further than it normally does, I would say, in these pullbacks. You've got an area of support resistance there in red. I think you've marked it, you've shaded it with red. It seems like that's an important level, but we're right back above it.
Yeah, and so we had this big candle here on the 4th. I mean, it was a dominant candle. It was a benchmark candle. It was pretty big. It was bigger than anything else we've seen recently. And I'm wondering how much of that was kind of risk off going into the unenjoyment number on Friday.
Yeah, that certainly could be. I mean, it does look like news driven or event driven, because usually when we see big moves down, they might start at the top of the uptrend, or sorry, the end of the uptrend, right? This is kind of happening when the trend is already down. So that's not like we're seeing a bunch of buyers who are getting out at the top. They're kind of maybe moving down on other things like anticipation of the employment numbers. And those employment numbers, Jim, I know you were off Friday. They came in a lot hotter than predicted or forecast.
I saw that. I saw the establishment survey plus 300 or something like that.
Exactly, exactly. And we didn't have time to really delve deep into those numbers. I think, it's worth a look to see what those numbers really were, how they break those jobs down.
Yeah, it's interesting to see, the dialogue and the conversation after, these reports are released about, oh, these are only part-time, these are low, these are, lower wage. There's a lot of no offense, Tom, doubting Thomases out there when these really good numbers come in. So I don't know what to make of it.
Well, the market certainly reacted, and now we're back above your. I mean, if you're trying to reemphasize the point of a hamburger bun, and you just put that big old piece of hamburger in the middle, I get it, but I think it's more about that support becoming resistance, and
Yeah.
today trading above it, even though it's a doji right now, we don't have a lot of news releases today.
Mhm.
It's hopeful. I think that we're still in that bullish mode for sure.
Well, there's a couple things. So let's go ahead and talk about the economic releases that we're up against today.
Right, like I said, not a lot happening. Export inspections at 11 a.m. 3-month bill auction 11:30. 6-month bill auction. Those are usual weekly auctions that come out. Then we've got crop progress USDA, and really the only Fed speaker we know of is Neil Kashkari. He's the Minneapolis Fed Bank president. He'll be speaking tonight at 7 p.m. So that will be in the next session. That won't even be this session.
Yeah, so that'll be interesting to see. Listen to tonight, Neil. We're not going to cut interest rates till 2064. Kashkari coming up. So yeah, so okay, that's it. So anyway, a commitment of traders report on stock index futures aren't really that meaningful in my world, but we did have pretty big cut, right? So I'm just going to put my crosshairs here. We were at a positive 74,000 state. These are the commercial. This is the commercials, right? And you think about commercials as producers or as a hedgers, and usually the commercials go in opposite direction of price. Price goes in opposite direction of that. And so we went from a slightly positive state of 74,000 down to a negative state of 22,000. So that was a decent kind of change. And at the very bottom, open interest hasn't changed very much. So open interest is about the same. So participation and holding positions is about the same. But we had a pretty big breakdown here without a kind of a big rally yet. So I'm wondering if this is going to, I know it's delayed data, but will this suggest perhaps more upward pressure on equity prices? I don't know.
Yeah, it'd be interesting to see what that delay is, right? We know the data is delayed by a week, but what does the market do after those is it already baked in, or do we see a little bit of a lag? And it's not easy to see when we have weekly data on daily data.
Yeah, exactly. That's a good point. And I did the daily chart time because it's easier for us to kind of really focus on our bias for today,
right,
for the intraday trade. RSI is arcing up again, past, a little bit more bullish here after Friday. And today, that doji that you pointed out here is pretty interesting because it has a pretty decent sized shadow at the bottom.
Yeah.
So, all right, I don't know. I think I'm open minded today in this particular market, but leaning toward being a little bullish today.
I think so. I think those, like you said, that long wick to bring it back up to doji, status is pretty a bullish reaction.
I like that. Bringing it back up to doji status. That's like elevating that candle to something really important.
That's right. That's right.
Oh my gosh. All right, where do you want to go next? We could take a look at the NASDAQ, I guess.
Yeah, let's look at NASI.
Pop this guy in. I'm doing the classic one here because we get better commitment of trader data, but it's not commitment of trader data here isn't that meaningful, so we're not going to focus on that. But let's take a peek. Well, maybe it is a little more. Maybe the commitment data trader is kind of interesting because it's it's a different trend than we just saw. So this is an old kind of area of support that I have kind of bobbing its weaving its way through of several candles. And then a nice area of support up here. I guess I could do a similar one to complete the hamburger bun down at the bottom here somewhere, something like that. So this is where we're trading right now, Tom.
Yeah, and interesting, the commitment of traders report, it continues to increase, which if that is an inverse relationship, you compare the two commitment of traders reports for the E-mini, S&P, and the micro or the NASDAQ, it would say that maybe rotation into E-mini and out of NASDAQ. But there still is some sort of systematic trading going on right here. So not surprising that we see a reversal candle on Friday that didn't quite get there. And sometimes these reversals take a couple of bars, right? That's such a dominant candle on Thursday. It can't always just snap back, right? It takes a little bit of time, and we may see that today, although we haven't quite gotten up to that high, taken out that open from Thursday, which is the top of the red candle into your resistance area. So it might take a little bit to get above there.
Yeah, but the three candles are pretty much identical. Just if you just kind of cut and paste and looked at those side by side, suggesting that was systematic price behavior.
Yeah, if you were to combine the last two candles, today's and Friday's, it would be a almost equal and opposite green candle. Although, that's kind of wish fulfillment to an extent, but that's what it would be.
Yeah, for sure. So, and by the way, Craig Bewick's coming on, and this is the CME market of the day. We're going to talk about this. We're going to talk about the Magnificent Seven. We're going to talk about market capitalization and all that good stuff in a little bit today.
Nice.
So, I don't know. Let's go to Russell 2000 while we're at it. So let this data kind of get in here into the software here. I haven't loaded this one yet, so we'll take a peek. Interesting. Well, not systematic. Well, I don't know. What do you think, Tom? I'm not sure what to make of this.
So it looks like the behavior was similar. It's just the extent to which the market did or did not retrace on Friday, right? So we saw NASDAQ E-mini kind of had a nice bodied green candle on Friday. Here, not so much, right? Couldn't quite get that bump, but instead of a doji today, you've got a green candle there that almost takes out the top of the red candle. So from a just a different shape, but looking somewhat similar, right? The equities maybe are risk on is back in since Friday after the jobs report. That could be.
Yeah, and I really love your comment about rotating into one stock index versus the other. I think we're going to see a lot of that as portfolios are rebalanced and folks have different opinions on what's important and not important. But if I were to draw a trend line here, we've kind of slowed our roll a little bit. So I'm just going to do a loosely fitting trend line here and just drive it all the way through here. And so we haven't recovered from this, what were two big red candles, but a breakthrough through that trend line and then kind of sideways here. I know we broke through it earlier today, but maybe a little bit of a slowing of the roll on the upward momentum in the overall in the Russell 2000.
And I think your commitment to traders, that even though it is lagged, does kind of reflect that, right? It's just kind of going sideways. There's not a lot of change there, so not surprising. You could look at this kind of a little half-eyed, and you could say, well, maybe we've been consolidating since February, right? Since mid-February.
Yeah, that's a great point. The commitment of traders is still positive, a pretty decent amount, 12,000 or so going sideways. Same with the open interest at the bottom. Again, these are folks hedging, right? These are net longs, right? Hedging against the opposite move. So, i.e., they expect a sell-off.
Yeah.
All right. Where do you want to go next? I want to let's start moving over to some of the commodities, Tom. Let's go to crude oil. Sorry. My bad. I almost said gold. I did say gold.
Black gold.
Black gold, Texas tea.
That's right.
Would that show ever be aired today? Or
it has to be, right? I think so.
Okay. So it wasn't over the top in some of its caricatures.
Oh no, yeah, it probably was, but I think they'd go even more over the top, right? Get the Farrelly brothers involved, and you've got a new Beverly Hillbillies.
There you go. All right, so let's take a peek here. So crude oil again, we're in a bull market here, and this is a situation where the commitment of traders is a real thing to pay attention to. And I'm just going to draw my crosshairs up to approximately, the week before February 19th. We already negative, right? So the hedgers are short, anticipating a rally, and now we're becoming more and more and more and more on a regular weekly basis, more and more short, right? Net short for the commercials now are minus 334, and sure enough, this market is railing up. So they are correct in hedging themselves or participating in this manner. Again, I'm bullish here, Tom. This is a pretty nice run on crude.
Yeah, certainly the chart is bullish. You've got RSI over 70, meaning it's overbought. We know that it can stay up there for a time, even though it doesn't seem to have done that in a while. It's because, oil hasn't seen a really big run like we've seen in the last month and a half or so. Just getting to that overbought now is bullish. We had I think some comments by Saudi Arabia saying that they were going to set prices higher. I don't know if it certainly didn't really reflect itself in today's trading. I thought this would have extended past Friday's close. It didn't, so maybe it's something that has to go through the machinery. The no pun intended. It has to take some time to get there. But yeah, I'm certainly not looking for places to sell. Although you're right, that doji right there, if this were a red candle, this would be a little more bearish, I think. The typical evening star, right? Green, doji, red. We have green, doji, green, which means it gapped down on the open and then traded up.
Yeah, and so I would say that's the potential fly in the ointment, so to speak. That turnaround doji. We have a 1, 2, 1, 2, 3, 4, 5, 6 6-day rally that's very clear and present. It's pronounced.
Right.
We started that off at 81. We're up to 86. That's a $5 plus move, which it's not quite 10%, but it's pretty big. And then when I see these patterns here, I'm thinking turnaround doji potential, right? Now, this is still really strong. And today's candle is like, no, we're not selling off. We're going to stay above my trend line. But so, anything could happen today. It's going to be a long day today. So I'm going to circle that with a red dotted ellipse.
That's good.
So open-minded today, but this is looking strong again. And again, these turnaround dojis, I think you called it an evening star. They're not 100%, right? Any chart pattern is not 100%.
Well, you just have to go back to early last week. We had a strong up move and then a doji, and we had follow through on that bull move the next day, right, on Thursday.
Yeah.
But the difference is our follow through today isn't above the doji; it's below, right? We've got a green candle, but it's below. So, to me, it's a little bit mixed up. It just could be a pause, and who knows what happens. Crude is also responding, could respond to geopolitical events, right? So that's stuff we don't know. That's news we don't know about.
Well, yeah, Jamie Dimon talked about that when he issued his 61-page report on the state of the economy. I didn't read that one yet, Tom, but
yeah.
If I would have had it on the plane ride back from Chicago, I would have read it. Maybe, I don't know.
Yeah.
All right, let's see. We got plenty of time. Let's move to gold real quick. Gold has been on a tear. Let's see what that's looking like right now. Similar, but man, oh man, what a rally up. 2350 almost in gold. I would have never anticipated this time, but this is a really strong rally after a pause, after a rally.
Yeah, and RSI 81, on a daily, that's healthy, right? That's healthy, indicating a nice run, and it could stay up there, right? So, I am definitely bullish on gold in the longer term. Now, today we have a kind of doji with some nice wicks. I wouldn't call them long-legged. So there's a long-legged doji, Jim, that has bigger wicks on the top and bottom. Maybe it is a long-legged doji, but it indicates that this is the price where we are. Not a lot of news coming out today, except for maybe unplanned news we don't know about. So this might just be a cautious market until we get some new information this week. which, by the way, we do have some inflation news coming out in CPI and PPI. So that might be anticipatory for a couple days until that comes out, I believe, Wednesday morning.
Yeah, it's going to be a relatively slow news week, except for Wednesday and Thursday. We have CPI on Wednesday, we have PPI on Thursday, along with jobless claims, and then really nothing on Friday. So Wednesday and Thursday is going to be the double whammy.
And then we have WASD, I think, on Thursday as well for the agricultural market. So yeah, big day. And then of course we have crude reports on Wednesday and nat gas on Thursday, which can move the market. So it seems like the focus is on Wednesday and Thursday.
Yep, for sure. Let's keep moving here. Let's go over to silver real quick. Silver is this might be actually the market of the week. I mean, this is or the month anyway. I mean, silver is we're moving. $27. You don't see these prices in silver a lot, and we don't talk about the silver futures a lot. And there's smaller versions of this contract that I would encourage everybody to consider instead of the bigger one, because this does move. This is a huge contract, but right now, this is looking like it's catching a bid. It's pretty strong, Tom. Just by looking at the candles right here, and the commitment of traders are reflecting increasing short positions, protecting themselves for this rally that's continuing here. So there's no change in that. And then the open interest is also increasing. So people are adding short positions here. It's not a consistent toggle back and forth where you have flat open interest where longs and shorts are just swapping out. But here it's adding to the positions, and commercial net right now is negative almost 68,000. That's a big number.
So Jim, you put it, interesting with the open interest increasing. If it were flat, what would that mean? With the increase in the commercials going more negative, does it just mean that they're maybe getting rid of their longer position or their long positions and going into their short hedging if open interest stays the same, or there's more activity when open interest increases, people are adding on to those hedges?
That's a great question. It's hard to tell, but when open interest increases like that, that suggests to me that there's more. It's not just a change in a position of a particular entity, right, from short to long or long to short. It's additional characters or players getting involved in increasing the positions.
Okay,
that's what I think. But or even the same entities increasing their positions, right? In this case, they'd be increasing their short position to protect against upward exposure.
Mm-hmm.
So, but I'm bullish here. We've seen in my lifetime, but I shouldn't say lifetime, in my 20 plus years paying attention or kind of paying attention, trying to pay attention, we have seen like $50 silver. And I saw a question on Twitter last night. It was like, which market is more likely to double this calendar year? Is it gold? Is it Bitcoin? Is it silver? And I would have clicked silver as my answer there.
Huh.
So we'll see how that plays out as we go. Hey, Tom, who's the first to chime in today?
Great question. We have, let's see if I have that information in front of me. I don't have the chat open, so I have to look. We have two people, Jim. We have two people that are first to chime in. We have Jen P and Nick E. You got a special shout out, Jen P and Nick E, for being the first ones in the chat. We have two places to chat now, Jim. We have ninjatrader.com/events. You can go there, hit the play button, and put in a handle, ask us questions, or you have YouTube, the YouTube chat. So sign in and chat there. So thanks, Jen P, Nikki. We appreciate you being part of the show.
Absolutely. Appreciate everybody participating today, especially on a Monday with a lot of stuff going on the weekend. And Tom, we have a couple of events. Well, let's talk about those events after in the next section. Let's try to sneak in here the 10-year note. This is the 10-year note continuing to decline in prices right here. And don't worry, don't confuse my left-hand axis with the commitment of traders and the chart. I look at that all the time, and I'm like, no. They're separate axis. They're separate graphs side by side, if you will. So keep that in mind. But again, this Tom, this is I'm bearish here still.
Yeah, I mean, until the Fed starts changing their messaging, you have to be a little bit bearish. This is, this is a gap down, right? This is a gap down technically in every way, right? The low of Friday was slightly higher than the open today. It really didn't tick up. And, will the market want to fill that gap? Possibly, maybe not today, but maybe later in the week. But this is, to me, anticipation of higher for longer is what we haven't really heard since, end of last year.
Yeah, and the commercials haven't changed their tune. It's pretty flatlined for the last 4 weeks. Same with the open interest, maybe trickling up a little bit. So that doesn't really tell us that much, I don't think, over the last 4 weeks. So I'm bearish here. We can go long. We can go further down as once the Fed speaker saying no more, no rate cuts.
Yeah, and that that probability matrix. Now we're looking at low 50s for a rate cut in June, where we were looking at low 60s about a week ago. So I think this jobs report, and then we had, of course, a lot of Fed speakers who are starting to lowball the number of cuts this year, right? And maybe the market's listening to them and saying, well, yeah, maybe they are serious, and we're going to be higher for longer. We might not get the cuts we were looking for originally.
Well, let's explore that some more, and we'll take a really quick break. We'll get right back to the opening range.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
All right, we are back, folks, with Jim Cagney, Tom Schneider, Ninjatrader Live. Appreciate everybody being here today. So, Tom, let's keep talking about the Fed funds probability table and the tools there.
Sure. So we know that our next meeting is roughly a little over 3 weeks away. We probably won't see a cut, right? We're trending like 90 some percent, 95%. We won't cut. That's fine. But June is just flipped. I mean, Jim, this must have just happened, because I was looking at mine earlier, and it was favoring a cut, but only by about 51%. Now that's flipped over to no cut at almost 52%. So we may see that jump around between the June cut or no cut boxes, especially when we get more information. But this is looking like 2 cuts in 2024, not the 3 we were expecting.
Well, yeah, remember we were expecting 5 not too long ago. So
That's right.
Things are tightening up here. This is a great matrix. This is kind of good. This is maybe a little less aligned than on the dot plot now, a little tighter than the dot plot. So we'll keep an eye on this, as it seems to be the whole world Tom's talking about this. This is the topic du jour every day.
Yeah, for sure.
All right, let's shoot over here, folks. Let me kind of rearrange my screens a little bit, folks. Hang on a second here. I got a 10-minute chart up here. I was this morning time. I was like, I was doing all sorts of weird chart stuff just to try to, you know, get my focus back after taking Friday off.
Right.
So I'm going to we're going to get some 10-minute charts here. The opening range is starting right now. I'm going to hide my chart trader here and then pull in the axis a little bit more, go to the E-mini S&P 5262, and we'll take a peek at what's happening going into that opening. We are in the opening range right now, Tom. No, we're not. 2 minutes.
We got 2 minutes. Right. So yeah, almost a minute left of this candle. And we sometimes see that, right? Going into the opening range, we start to see a counter trend trade, maybe a little bit of a pullback. Maybe if it's a downward day, you might see a little bit of a rally right before the open, right? And it's not coming on news. This is not planned news. But it looks like, maybe those buyers that have been buying since about 5 a.m. are trying to get out of their trade before the opening range, because volume comes in and can move this market around.
Yeah, and I channel my inner Drager, Anthony Drager. All these buyers here are now sellers.
Right.
So the balance is shifted, and we're seeing sellers coming in right now, anticipating that bell, which we're going to get in 17 seconds. I have my bar timer down here in the lower right-hand side of my chart right now. But, we broke through VWAP, volume weighted average price, approximately 640 this morning. We wicked through it a couple times on the downside, but couldn't get further penetration. We couldn't get a candle close below there. And then we had relatively big candle here around 8 o'clock, 8 to 8:10, and establishing that bigger positive move.
And now we've got the first evidence of the opening range coming in right now. You've got a lower high, of course, but a higher low. The question is who's going to win out here. Could we continue on down to VWAP? Could we continue on down to the point of control? But with the volume coming in, we'll probably we'll probably overtake that point of control that's down at 5250, unless, of course, we trade right down there and start building it. So interesting to see what happens here.
So, Tom, I'm just going to go back to last session. Now, last session isn't yesterday. It was Friday. And I see this huge volume spike here at the end of the day. I wasn't around to kind of, I didn't live through it. You did. But wow, what a big spike at the end of the day.
Yeah. And what's interesting is I don't remember what that was for, right? Because it came in at what time was that?
So this was
it right at the end of the day? It was right before the end of the day, right? It was like second to last candle.
Yep.
And look at the movement on it. There was nothing going on, right? Look, it didn't move the market really at all, right? Big buyers bid it up and sellers knocked it right back down. So, what was it? Just end of week, getting out of my position, most likely.
Yeah, I mean that's a huge volume bar, right? Almost 100,000, and that I think was that, right? Do you want to carry exposure? Do you want to have exposure on a risk on? I'm going to call it a risk on asset over the weekend in a leveraged futures market, and it looks like the answer was no. That was my guess, but that's a pretty big. And it's also not a bad looking candle. Right. It's a handsome candle. It's got a nice shadow on the top. Right. So, but you're right, though. It didn't change much from the previous candle.
What it might have done is change the course of trading, right? You had a nice little uptrend going on there, and sellers just whacked it down on volume, right? Oh, we got to get out. We got to get out of our position, weekend, blah, blah, blah. And that just pushed the price down and took a couple bars to regain that upward mojo.
Yeah, very interesting. Then we had a gap overnight here, a little bit of a gap that was quickly filled late last night from where we closed to where we opened at the end of the day, beginning of the session on Sunday night. And now we're let's see where we're at now, Tom. I'm going to go all the way back here. All right. So is that all the way back?
Yeah, we got to keep going.
Sorry. I was like, wait a second. That can't be all the way back. Yeah, so interesting. Volume is accumulating at the top of the value area, right? So that's that dark, let me open this up a little bit more. That's that dark blue shaded histogram bar area with a point of control tracking approximately 58. Previous sessions point of control 51. So a lot of price happiness in here over the last couple sessions, Tom.
Yeah, and look at that volume coming in, right? And when we talk about volume on the volume scale, it looks big, but really the question is, is this normal, right? And we're at about, on the E-mini S&P, we're about 265,000 contracts traded. It's nothing to sneeze at, but it certainly isn't record volume at this time of the day.
Yeah, I'm 100% with you there. 100% with you there. So we'll see how it goes. We're still above VWAP. Will volume weighted average price hold? That's that purple line. That's the first question I have in my mind when I'm looking at the opening range. And then what are these bands doing, Tom? What are these standard deviation bands doing around the volume weighted average price?
Yeah, and they're not expanding, but we're not in a place on the range where it might force that expansion. The VWAP itself is increasing, but those bands aren't really getting wider apart. In fact, the second standard deviation band is slightly moving up, slightly increasing, but the one on the bottom is really, increasing at a bigger clip. So really these bands are narrowing, if anything.
Yeah. And so just to kind of right now, Tom, my sweet spot right now is right here. I'm thinking about the future. I'm thinking about a retracement back down below VWAP, a retracement below right to the bottom of the value area, which corresponds with that first lower standard deviation band, because my bias is bullish overall in this market today. So this is kind of my sweet spot. We'll see if we get to it.
Yeah.
All right. Yeah, and put it in perspective, Tom. So that closing bar we just saw from Friday was 90,000. We're halfway there already, right? We're halfway there already. We'll see. We got about a little bit over 4 minutes left, actually 4:40 before this bar completes. So, and again, this is we have 1, 2, 3, 4 red candles in a row.
Right. It could be just retracement past VWAP. I like that area, that target area. But again, we're not doing anything until this opening range is done.
Yeah. And again, I'm not interested in hitting the buy button either yet. There's just too much negative drag. I could though, at this point, I think it would be okay to draw a fib line in. I'm going to do that. Fib line. Where's my fib line? There it is. Now I'm going to use, where did this start, right? I think this is the trigger down here, back at 410 to 420, right after the European Open. And I'm going to go low to high. Again, I love these target wicks. I want to keep them in my sights. This is kind of the trend so far. We're tracking 50% retracement right now. And look at that, 62.5 retracement, Tom, 62.5%, which is about 61.8. So don't get all crazy, guys. If I'm not using the traditional fibs, I'm using the harmonics. But look at that look at that. It's right at the bottom of the value area, and it's right at that first lower standard deviation band.
Yeah, things are lining up there. It might be an interesting place to go long.
Yeah, that's my radar screen. Going long down here, stop below the target wick. You got to respect the target wick. A lot of times we get those. So it'll be pretty decent size, approximately $500 or $50 per contract on a micro risk if we decide to do it. Not, we have some time to go before we decide though.
We take a look at NASDAQ. Let's see what's going on there.
Let's do the micro NASI. Micro NASDAQ, 420,000 contracts traded, Tom.
Yeah, a similar behavior, although it's interesting. Your horizontal line that you have there, that dotted red line, seems to line up with some support areas. I don't know if you drew that for this session or for something else, but might be an interesting area of support.
So I have no idea why that line is there. So I'll be honest with you. This is a relic, right? We call these relics from analysis and I was off Friday, so it could have been Thursday,
right?
Could have been Wednesday, and I was working on one screen back then, which, by the way, Tom, is annoying. It's
hard, right?
Oopsie, what did I do? It's hard. It is very, very hard. So because we have all these Zoom windows open and all sorts of other stuff, but I'm so glad to be back. back on the island. I'm going to draw a rectangle, Tom. It'll be pretty close to where that line was, but you know, we dipped into it, traded up, wick through, wick through, wick through, wick through. The top of the rectangle touches the lowest body of a candle. That's where we're at the top here, approximately 72.50. We're just wick through it again right now on the contemporary candle. This is looking, I don't know. You could look at this and say, well, this is support. Don't worry. We're going to end up back to the VWAP. Or you could say, hey, we're breaking through support, folks. And next stop is the pivot. And then after that, you know, who knows where the next, where S1 is. S1's kind of far down here.
Right. And from an average true range perspective, if you look at the high of the day so far, it's right around what, 360, a little higher than that, maybe.
Yeah.
Yeah. So, you know, average true range on the micro NASDAQ is about 256.
Oh, wow. Okay.
So you could go down what to 100, 110, something like that, which is where? Which is S1.
This is S1.
Right.
Average true range in play S1. So again, this is a dominant candle we're seeing here, Tom. This isn't like, we're going to test the VWAP and we're going to pop back up. We're breaking through here. This target wick is going to be achieved before I'm done with this sentence right here at 247. There it is. We just did it.
Yep.
Whew. Well, looking pretty negative, and this might be the band leader. ES is down now. Although Russell's looking pretty strong, up 12.1.
Right. Yes.
Yeah.
So that's up over 0.5%. Let's take a look at that. Yeah.
Talk about rotations, Tom. I love it when you that was a great observation. Talk about rotations into a different asset, a different stock index future. Again, you see that big volume burst on the open, a rally, pretty much rallying all pre-market. You know, we left VWAP in the rearview mirror at 630, and now we're kind of retracing back down. I'm going to go ahead and put a fib in while I'm going to ask you, what do you think?
Yeah, well, so, you know, what's different is, you know, E-mini NASDAQ started to trend downward right before the open, right? Here, we didn't have that. And, okay, so maybe it's a little more elevated when it does turn around at the open, but that's the difference between being up on the day or being down on the day sometimes, right? So, yeah, it's starting to look a little bit weaker, but it's weaker from a place of, you know, close to high of the day or high of the recent time. Now, I think it was higher earlier, you know, as we see to the left, right? So, is that true? No, we don't see it. It wasn't higher in the day. So it was coming from a place of, you know, starting opening range started at the top of the trading range today rather than already trending down. You know, it's just maybe there is some rotation. I don't know, but oftentimes too, these markets trend together. So if one starts trading down, the others start trading down, but it's really a matter of from where did they start trading down and how much do they trend down. We saw that NASDAQ start hitting support down near the low. Russell, nowhere near the low of the day. So if you're bullish, you know, if you think today you feel bullish, this might be the market for you. If you feel bearish, it might be the NASDAQ. Just realize, you know, the daily candles seem to be a little bit, you know, neutral to slightly bullish.
Yeah, and not only that, you know, if you kind of look at the last few candles here, I'll draw a rectangle and I'll expand this up. This is Friday's highs, right? Friday's highs is kind of holding as support right now. If you look at my rectangle and if you believe in the rectangle, Tom, and the support is holding, right? So that's kind of a line in the sand here. You know, will we have a candle close below previous session's highs? And so far, no. I mean, we're having buyers come back in here. So a little bit of a opposite direction than the other stock index futures today, which isn't necessarily unusual.
Right. Right.
What else is on the move? Oh, by the way, who's here with us, Tom, today?
Got a great group. We've got R. Crawford, Raleigh, Turtle, Brandon N., At Home ATM, Brendan Lynch, Simo, Stephen Rios, Cos P., Rin Waters, Bo Hunter is here. For Money is back. Chadro, Boston J, Lowe is here. Paul H, maybe that's Paulie H. Nola Boy is here. Robert W, Kimon, Theo G, Bling a lot. I like that one. Jeanette is back. Avi, Tony Lyons is on YouTube. Heinrich Stander, new name. Welcome. AHZ Trading. Welcome to all of you. Thanks for coming to the chat. We enjoy that you're here, and feel free to drop us questions, comments, trade ideas. Have us, what chart do you want us to look at? Drop that in the chat, and we'll try to do the best we can to address that.
Appreciate everybody being here for sure. I love it when Tony was like, "Hey, I'm on YouTube, guys."
Yeah. Well, yeah, exactly. Tony Lyons, longtime viewer on the Ninjatrader chat, but yeah, if you find YouTube is where you want to be, that's great.
Absolutely. Appreciate everybody being here today as usual. Let's keep looking around. Again, Russell's looking strong right now. Right here, right now, Russell's looking strong. And then ES is in the green again. And as he's starting to get close to the green again, this is suggesting to me I should be bullish. Let's go down to gold though. Gold is off a little bit from where it was earlier today. A lot of volume early on at 810 to 820 in gold, shadow open. Think of it that way. But right now, Tom, look at that. VWAP is kind of flatlined right by previous sessions highs. Again, previous sessions highs Friday is coming into play.
Yeah, and usually, when you see that, it tends to be bullish, right? It's support at the previous day's highs, not a lot of retracement on a daily chart. This might be a new level that the market likes. And the one thing here that I will say is not usual for gold in the last few weeks is we've got these bands on the VWAP, reflecting that kind of flattening out, right? These bands are getting closer together. So, barring again any kind of unplanned news that occurs, this might be sideways trading today.
Very possible, very possible. And I'm wondering if there's a point in time, we have equities railing, the same time gold and silver's railing, the same time crude oil's railing, the same time Bitcoin's railing. And I'm wondering if there's a point in time when, kind of like your rotation comment, money starts coming off of one of these. Right? I don't know if it's gold or anything or Bitcoin. We'll talk about Bitcoin in a minute, but it's still holding its own at a surprisingly high price point.
Right. And where it highs that it hasn't seen, ever, right? So
yeah.
It's okay if it takes a pause, right? You can forgive it for taking a pause.
Would you do something like this with the trend line? Would you take that peak high we had back here with a big volume spike, by the way, at what is that? What's that? 10:10 last night. That's interesting. Let's talk about that, and then just touch it to the recent area of resistance.
Oh, sure.
Okay.
Yeah, and so, one, gold is a global market, and you see the volume panel reflects that, right? So it got a little bit of volume at the beginning of the session, and then at some point overnight, it, like you said, 10:10 got a big move up. That to me, that move up on a big volume is legitimate, right? It's a legitimate move. And yeah, it came back, started trending downward on lower volume. But I would connect that high to the recent highs in pre-market, pre-market for the US Open, maybe, European session, whatever you want to call it, because, it's a global market. It's perfectly fine.
Yeah, and that's a big candle. It's a benchmark candle, right? That's setting the pace. That's telling me, hey, this should be a bullish day today. And then I go, which is consistent with the longer term trend. And then you see that volume note. That's pretty big volume, relatively speaking, for this marketplace at an odd time, right? It's not odd time, like you said, for the world, but for, me and you, I don't know if you were in bed by then, but I certainly was.
Yeah, I didn't have my charts open at that time at night. So for all intents and purposes, I was sleeping.
At night when I'm winding down, watching TV or sitting around the fire pit with Mrs. Kaggs, I'll have my Ninjatrader mobile open and I'll be looking at. I'll be watching the quote. It annoys everybody around me, I know, but I can't help it. Newbie S is with us. Anthony P. Ravine N is with us today. Appreciate you guys being here.
Let's take a look at Bitcoin. You mentioned Bitcoin, and I think today is an interesting day, for a lot of reasons. We know today's an interesting day, right? Not just in charting world, but of course the real world. We have that solar eclipse occurring this afternoon. Depending on where you're in the US, you might have a great look at it. But also in the world of Bitcoin, it's Bitcoin halving day, right?
That's right. Bitcoin halving day, which means if you're a miner, I'm going to use the word miner because I love it. If you're a miner for Bitcoin, your compensation is cut in half going forward. I think that's in a nutshell, that's what that means. The simplest way to explain it. And Tim, there's been a lot of bad information on Twitter, right? There's in other social media. So be careful, folks. When you see somebody on Twitter say, well, because of the halving, Bitcoin price will automatically double. That's not true.
No,
right?
This is not a stock split, right? This is not every Bitcoin gets revalued, right? This is the effort that it takes to mine a Bitcoin. Think of all the processing power, the electricity to power those rigs. If you're a Bitcoin miner, you're not doing it on what Jim and I have on the rigs we have. You probably have some very serious rigs that draw a lot of power, so it's costly, right? But that costs you. Hopefully, you're rewarded with the reward of a Bitcoin or two. That reward has just halved, right? So all that effort, all that time, more importantly, all that cost results in half of what you used to get before today. So it does have an effect on price, but we don't know what that will be. And like you said, it's not an automatic doubling of price by far, not at all.
Yeah. So I'm not using that as a gauge to what to do, but I think it would probably be more interesting to say, all right, what happens to halving, or what happens to Bitcoin during a solar eclipse? Does that affect the price or not? I don't know.
We'd have to go back. What in the US, the last one was, I think, in 2017. So don't have to go back too far to find out.
Yeah. Yeah. So in any event, probably not enough data points, Tom, but
right, exactly.
Yeah. Blue Putnam would smack us on the knuckles if we said that. Let's go to Treasury bonds. Treasury bonds. We have a question from at home ATM. I love that handle. At home. Appreciate you being here. I am new to trading and I come here to learn. Thank you we appreciate you being here for sure. Can you take a look at the ZB? That's this ticker symbol for the long bond, or the 30-year Treasury bond, which is where I cut my teeth back in the day. My idea is a gap fill up to 117.06. So this was a little bit of a late. I didn't see this comment right away. We do have that gap from Friday to this morning. And we're right up against it, man. I hear you. So what ATM is saying is, hey, are we gonna fill this gap? Is this gap going to be gone? And let's just kind of look at the gap and see how tight it is. I'm just going to use a rectangle. I'm going to define the gap from the bottom of the wick to the top of the opening candle here. Let's see if I can get that. Let's see how precise I can be. So there's that gap still, man. It's still there. The gap is still there. We wicked into it a couple times, so in theory, the gap is tighter than my rectangle there, but we haven't covered it, right? We have to get up to 117.10 really to blow through it. But your idea at home, if you came up with that idea, way back at several candles ago, you would have had a nice trade going. But I think gaps don't always get filled right away, so that's the thing. That's a misconception. Right. And in theory, depending on what type of data you're using, gaps never get filled. So in this particular case, though, do I think it's going to be filled? I do. I do think it's going to be filled, and probably today.
Yeah. And if that was your theory, an hour ago or 2 hours ago, or even 4 hours ago, whatever time it was, let's say it was an hour ago, you flip on your screens. You say, wow, what's gapped today, right? What's any markets, have they gapped down or up? Oh yeah, look at bonds. Okay, well, you could have acted accordingly, right? You could have said, okay, I think we're going to fill this gap. It's going to take a while. That would have been a nice decision, I would say. Trailing stops are your friend when you're trying to make a big run like this, right? So even if you don't get to the point where you fill the gap and maybe you get stopped out, it still could have been a nice trade, right?
And this is more of an institutional market as opposed to more of a speculative retail market. So the gaps are a little less important, right? The institutional trade desks are calculating things like yield, and they probably are invested in different duration instruments. So there's probably a little bit less impact on the idea that, hey, we're going to fill this gap, I'm going to get long.
Right. They're filling gap, they're no pun intended. They're trying to fit this future contract in their overall strategy rather than closing the gap or looking at technicals.
Yeah. And I made a mistake when I called it at 10. It's 06. We're one tick away. We're one tick away. So we have to break through my rectangle by one tick, and then ATM, we get it. We'll see if we get there. Ripper 24, Lewis H, Winter PD, welcome. Appreciate you guys. Hope you had a great weekend. Looking forward to a lot of work this week in the futures market. A lot of opportunities, a lot of risks. So be careful there.
I do want to say, though, Jim, for at home ATM, good call on identifying a gap and knowing what the conventional wisdom is, right?
Yeah.
Conventional wisdom is market likes to fill gaps. And like Jim said, each market is different. But, really, really good as a new trader. That's not always something that's easy to learn. So good job.
Yeah, absolutely. There's whole studies and websites devoted to gaps. So, I have so a good friend of mine, Scott Andrews, did he had a bunch of data scientists and focusing on equities and futures, and came up with a nice business around that. Scott's a smart guy. He's also in North Carolina, another Carolinian.
Carolinian, I like that.
Is that a thing or no?
You just made it up if it isn't? No, it might be. It might be.
Well, you got two of them. You got North and South.
Right.
Carolina, South Carolina.
Right. The Carolinas, as we call them. Yep.
Yeah. Carolinian. I'm going with that, Tom.
I like it. Sounds great.
Oh boy. All right. Let's see. We have, I don't know, opening range. Let's see. What time is it? We have another few minutes left. Any markets any last market you want to take a peek at, Tom, before the end?
Let's go back to Bitcoin, because we talked about we didn't really look at the chart as far as what was happening. And here's a gap, right? Here's a gap. It gapped open.
Yeah.
And continued, though. There was follow through. And looking at it, Bitcoin's up almost 7% today. So I don't expect that gap to be filled today. I could be proven wrong, but I think the dynamics are, what you believe about halving or not. If the conventional wisdom is it's going to go up because of halving, and the market believes that, then it might be harder to fill that gap. We did have, who was it? Was it Eric Norland that was saying that he was looking at the 365-day analysis of halving, right? 365 days later, and Bitcoin happened to be up the three data points we have, right? The three times it happened before. So the conventional wisdom could be that, wow, this halving makes those Bitcoins we already mined a little bit more valuable, right? Because the new ones are just harder to get. So there might be some of that. That gap, I don't think, will be filled today. I could be proven wrong. Again, these VWAP bands are just not expanding; they're contracting. So, we may have seen the move in Bitcoin for today, and just might be range bound between those VWAP bands, or looking at pivots. It might be a pivot trading range, although those could be pretty wide too. So, I'm not bullish or bearish. I'm kind of open minded. Maybe the move has already been made in Bitcoin.
Yeah, I don't know. We're above that 70,000 level, which is, maybe a psychological level or not. We've been kind of on a daily chart, trading a little bit above, a little bit below, a little bit above, a little bit below, big ranges for sure. But this is, I think, still a bullish proposition here. And the VWAP has not been challenged since early this morning. So I'll probably be looking for places to buy. We're on the April Bitcoin, by the way. Anthony says, how do I re-roll my Bitcoin contract? It is stuck on March while everything else is on June. This is this is a monthly contract, so it rolls every month. The front month is April 2024. The easiest way to do it is just you click into your chart here and you just double click here and just put instead of March, just put APR 24. The same with your market analyzer. Just double click and you'll activate that instrument box, and you could just type in APR 24 after your whatever the core symbol is. Alternatively, I'll show you after the break. I'll show you another way to do it too.
Jim, by the way, speaking of break, before we go into the break, I do want to remind everybody and remind you, of course, we had a Guess the Close contest last week that was determined with the settlement of the E-mini S&P June contract on Thursday afternoon. So we did have a bars closing, but it ended before the settlement, right? So if everybody can stick around, next segment, we will announce the winner of that first contest.
Tom, did I win?
No, you did not win. I don't think anybody here at Ninjatrader won per se. But we do have the winner, and pretty interesting results.
Yeah, absolutely. So yeah, we'll reveal that in a second. So let's go ahead and take a really quick break. We'll be right back to it.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
All right, we are back. The opening range is over. We're going to be looking for some trade setups. But Tom, you said I didn't win.
Right.
And now I see, which is, it was upsetting to me for a couple of seconds here during the break, but I'm over that. I was beat by at least 20 handles.
Yeah, for sure. So maybe we can just go right into it. So we had a Guess the Close contest. E-mini S&P June contract. Where did the where did it close on Thursday? And what was interesting about this contest is there was a 2-day separation between when you could get your guess in, the final guess, and when it happened. So really interesting dynamics going on there. How do you predict, right? And I'd love to hear, let's talk about our predictions first real quick. What was your prediction?
Well, as I recall, I was around 5176, and mine was 5176, right? What was the actual close price, Tom?
Well, let's talk about that. 51.91 was the final was the settlement price on Thursday.
No. 51.97 and a quarter was
51.97.
Yeah,
25.
yeah.
So you were pretty close, right? You were 25, 26 handles off.
Yeah, and I heavily relied on the CME Group's daily option skew on their vol to vol tool, and as well as a retracement level. So that was my technique.
Right. And I had a similar, not a similar technique. I had a similar guess. It was a little lower, 51.48. That was two average trading ranges roughly from where we were on Tuesday. So I thought, my opinion was we were bearish, and if we just took 2 days, two ATRs, easy peasy, right? Easy peasy and wrong, but easy peasy to come up with a number. So
yeah, but you had science there.
little bit.
So the actual winner, Tom, was pretty close.
Yeah, and I gave it away. I apologize. The guess was 51.91.25. That was the closest to the settle. Pretty impressive. Who was that winner, Jim?
That was Mark R. Mark R, congratulations. You are going to receive some Ninjatrader. Mission Control, I love you. You're gonna receive some Ninjatrader swag. And we're also going to strong arm Craig Bewick here in the next segment to send you something too. But I appreciate you, everybody who participated. We're going to do this again. And that's pretty darn good. I mean, I can't predict what the price is going to be in 2 minutes from now, let alone 2 days. And Mark nailed it. He was like, that's pretty tight.
Right. And especially in an environment where the market's been up all year, and yet this prediction was lower than where the price was when the deadline happened, right? It was Monday, Tuesday was certainly, E-mini was trading higher than 51.91. So, good for Mark R. Congratulations, winning the first contest on Ninjatrader Live.
Yeah, many more to come. Appreciate you. Appreciate everybody for participating. And we'll shortly announce the next event. So E-mini S&P time, let's talk about some trade setup ideas here. We're getting close to my sweet spot right now, and I'm going to use a more permanent ellipse here just to draw what I'm thinking here. So this area right here is kind of a hot spot for me. We're trading below VWAP right now, but we're in between the first and second standard deviation band of VWAP. We're above that 62.5% retracement, but that 62.5% retracement is right by the bottom of the value area. So I have two areas of interest to think about. And then lastly, previous session's point of control is 51.25. Today's point of control is 54. So in my world right now, and this is pretty tight trading range we have right now, is I want to see a retracement into my circle. And I want to try to get long and put my stop below that target wick. That's what I'm thinking.
It sounds great. And, this is one of those things where we're looking at an E-mini, but in a micro, you might do something a little different. I like your target for the entry. You might even, with a micro, you might say, well, let's go long at that Jim's target in the ellipse. But also, if it goes a little lower, you might pick up a second unit, right? And then say, okay, well, below the target wick is a good place to stop out. The one thing, Jim, I see that might be brewing, that might be a little bit of a spook is a Head and Shoulders.
Uh-oh, right. Tell me, walk me through this. What are you seeing?
All right, so so you could see the head pretty obvious, right? It's the high of the day, right?
Right there. There we go.
Right. Okay. So if we go down to those the lows, maybe grab a horizontal line, and I'll guide you through it.
Okay. Let me get back there. All right. Go ahead. All right.
So right there, yeah, right there, a little bit lower. Go low. There you go. Like that might be. Go a little higher. Go a little lower. That target wick just a little bit lower. They're right there, roughly right there, right?
Okay. All right.
So that's where your neckline could be, right? And so you've got where your crosshairs are right now. That's the start of the first shoulder of the left shoulder.
Okay.
And the market goes up. It doesn't quite get anywhere. It comes back down to closes above VWAP, but it trades down to the neckline. Right. And then it elevates, it gets past the shoulder, it continues on, and it peaks.
And time out. This is the shoulder right here, right?
Correct.
This
where your
right
crosshairs are. Right. Exactly.
Right here. Let me just shoulder. All right. So we got head, shoulder, neckline starting down here at the bottom of the value area, going somewhere. Okay. Keep going. Head. Now where's the second shoulder?
Well, we're forming it right now, right? So it's not
Okay.
as wide, but it's kind of that same concept, which is we traded down to the neckline and then we couldn't elevate past, really past the other shoulder. And so if we trade down to the neckline, it might be a breakdown, right? It might be, and I would go lower with the neckline.
Oh, my bad. My bad. Yeah. No, I know.
Yeah.
Right.
Oh,
Right.
you're doing that. Okay. Yeah.
Yeah. And then
So
where am I going across like that?
Go, yeah, a little lower. I would go sideways. Yeah, like that.
Okay.
Right. So, that's just above where your target is. So if we get that target, it could hold. That neckline could hold and it could bounce, we could wick through it, get your target and turn around. But we also might see some follow through. And if we do see some follow through to the downside, where could we go? Well, that's when we measure top of the head to the neckline and move that down below the neckline, kind of like flipping that head and shoulders across that, that axis, if you will.
Yeah.
And,
So I'm going to do the measured move. Tell me if I'm doing it right.
yeah, that's fine. That's great. That's perfect.
Wow.
Yeah.
So I would be stopped out in my trade idea if this measured move. So the measured move is from the neckline, which we just drew. So we have a shoulder, a head, a shoulder. You got to use your imagination. This isn't always, perfect, right? And then we do have candles and the wicks kind of distort things. So shoulder, head, shoulder, and the neckline going across from the bottom of the shoulder to the bottom of the shoulder or the neck. And the measured move is from the neckline up to the highs. I put it at the wrong candle. The neckline to the high, and then you just cut and paste that. You duplicate it. It's going to be the same size. You paste it. If we were to break out below the neckline, and that's the measured move part.
Right. And that's what that pattern might imply, right? But it doesn't always happen. We know that. And plus we do have to have that trade, we have to have that shoulder complete. The shoulder might not complete, right? But we know enough pieces of the formation to even kind of project where that measured move might be. Okay, so if it does do this, then this is what it implies, but it might not do that.
Yeah. All right. Well, see, now you spooked me. Completely spooked me, Tom. So what do we do when you're spooked? You go to another market. You look for a better setup.
There you
Let's
go.
go to the micro. Let's go to the micro Nasdaq. Wow. Interesting. Oopsie. Sorry. Let me sort this out, everybody. Chris Kaggs is with us today. Chris Kaggs, good to see you. Great to see you this weekend. We were up above VWAP again, Tom.
Yeah. So this is getting a little bit of a burst rather than, E-mini trying. Although, maybe this is where the E-mini is and it just extended lower, right? Because I'm comparing where we are now to that similar left shoulder. This isn't exactly a head and shoulders, but where that left shoulder would have been, and we're right about where we were. So, Nasdaq often has a little more volatility than the other markets, so this isn't surprising.
I have a little more conviction here. This is a benchmark candle like we've never seen before. Well, we've seen it before, but I'm being, exaggerating. But this is a big benchmark candle that we saw here. Big sell-off. Retracement back up to the 62.5 has failed so far. We have a series of higher highs and higher lows. I understand that, but these sellers are coming in. You see these big Mohawk wicks at the top of the last four candles. Sellers keep pushing us back down. So I'm feeling, Tom, right now is like, hey, let's try to get a multi-unit trade based on some, again, and I'm going to use the word retracement back up, right? Really back up, because this 62.5 is holding.
Yeah, I think that's, a good place to see if we can rally back up. The highs are getting higher, but the sellers keep knocking it down. So the question is, can we wick through that 62.5 and either, see if it's a turnaround, if it just holds, or can we get a quicker win, right? There's enough volatility that maybe we can get a quicker win rather than trying to see if this trend will go down, because it's been sideways all day. We've been up and down around VWAP all session, it seems.
Yeah, but I think this looks like it might, this rallies might have, this last 3 candles might have kind of exhausted themselves. So if I was going to be more aggressive, I'd get short at the 50, short at the 62. I'd have an average price somewhere in the middle, and it'll be a little bit better on the risk. Now we might have missed it. I'm going to throw it in the 50, but that's okay. You know, patience. Rule number 1, 2, or 3. I'm not sure where it's going to fit in my rules category here, but top 3 rule is patience. So I know I'm being a little more aggressive than you probably would be, Tom, but
yeah,
time will tell.
We had a great show by the way, on Friday with Tim Reset. We had a great segment talking about FOMO and talking about, you didn't say the word patience, but really that's what it was a little bit.
Tim Reset, E-Mini Mind. I think that's his website.
Yep.
I've first started working with Tim, I don't know, 15 years ago at my previous outfit. I'll just say previous outfit. That sounds good. And he's calm, patient, and in his demeanor also, right?
Oh, for sure. Yeah. Very, very, very calm. Like you say, I don't know if there's a better word for it, but, very deliberate. Right, very deliberate in his way, and he kind of came through while we were talking. That was great. We'll have him back on.
Yeah, no, that's awesome. I can't wait. All right, so Tom, got a little bit of work to do here. I got to put a stop in. Now, this will be a hard position to manage, because there's so many areas of interest above here, right? And I'm even thinking, well, do we do a third unit at the 75 to get a three unit average, and then or we want to do something more conservative, and say we get above that second VWAP band, we're out. I don't know. I'm a little bit worried, because we keep trading above that second VWAP band, 1, 2, 3, 4, 5 candles worth.
Yeah, I'm looking at the volume profile though, and I'm seeing that divot as like right there. To me, it's
something like that.
Yeah, I would probably put the stop at the bottom of that rectangle. The reason is if it trades there, it'll probably trade higher. And I say probably because it'll want to fill the gap. Now, of course, that doesn't always happen, but I look at that and I kind of see this vacuum. It sucks that price up. So the question is, do we want that trade? Do we think that we'll get up there? First of all, I don't know. The longer we stay down here, especially if we start trending down, that VWAP band, that second standard deviation, will probably be pulled below that box, right? That area.
Yeah, good.
You see what I'm saying?
Okay.
So I'm thinking, you put your stop there.
All right, let's do it.
And it's got to be a 2 unit, right?
Yep.
Exactly.
Use the chart trader. We had some fun with the chart trader last week. We're going to continue our journey with the chart trader for a Ninjatrader Platform Unleashed show in the future. So stay tuned.
Yep.
All right, now we have 1 unit in, so we really need to pretend like we're only going to get this 1 unit. In other words, we might not get our second contract. So where do we want to, we should put a profit target in, right? Best practices, you should put a profit target in, unless your idea is you're just going to let it run and run and run. For me, I want to put a profit target in, and I'm looking at this area of support down here, this rectangle that I drew. Yeah, we had 2 candles that traded through it. This is typical NASDAQ euphoria, in my opinion.
Right.
I would probably use that as a target for the first unit.
Yeah, I think that's good. It's right below the value area. There was still volume there. I think that's good.
Yeah. And we're not putting a second unit in because we don't have a second unit on the table. We don't have a second contract. We only have 1. If we get filled on this, on our second target at 18,321.5, then we have some work to do. But right now we could just kind of sit back and watch it all unfold.
Right. And we could do, we could make that target that you have there as a 1 unit. You could make it 2 if we get that second unit, or we could put it somewhere else. Really depends.
Yeah, exactly right. Right. And there's 2 strategies, right? Just have 2 profit targets in there at different prices or the same price, or let one, if 1 unit gets successfully filled, then we could move our stop to break even and then just let it and hope for what we call is a runner. Right. What's a runner, Tom?
Well, I mean, there are a lot of runners, right? But a trade that's running away, that's, it's funny because in trading markets, a runner was something much different 40 years ago, right? Or 30 years ago. A runner was, well, what is somebody who ran between the desks and the pits, right? Is like a messenger kind of, but
yeah, you get the order from the desk.
You run it into the pits.
They write it down. They put it on a piece of paper. Give it to you. You run it to your guy or whoever your broker is. You're filling whoever's going to fill the paper. You give it to that guy. And you run back and forth all day. That's the that was the Jeff. So you were in good shape. You ran a lot.
I'll bet.
Not only that, you ran through traffic because there's a ton of people running around.
Right.
So,
right.
And all in different directions, because it tended to be organized where you had the desks with the phones in a line around the pit. But then, depending on where your broker is, you could bump into each other.
Did you run to different pits? I mean, would a runner focus on one pit, or would a runner go, let's say, cover a couple pits, right?
Yeah, it just depends on the logistics, like how big the firm was, where the order desk. If you were doing a grain order, it would be in a different room, right? So it'd be, maybe they'd have their own phone there, but yeah, for sure.
Okay.
Boy, just kind of hovering right here by that point of control. Really nice volume profile. A little bit of a volume node way up north around 18,360. Have my eye on that. But again, that happened during right before the opening range, I believe. It just kind of popped up, or maybe during the opening range. No, before the opening range, and didn't spend that much time. Only 5 candles up there, but it did generate a little bit of a volume node as well. But mostly the value area is looking pretty good right now. And I expect us to go back and forth within that dark blue area.
Let's take a look at the E-mini. I want to see if we did the right thing by running away from the E-mini.
Let's check
Speaking
it out.
of runners.
I still have the head and shoulders so that interesting. Yeah, we never got to my target, so we wouldn't have got a fill, right?
And that formation is still in play, right? The head and shoulders is still in play. And I would argue your target is still in play. If you wanted to go long here, the longer we stay up there and make that shoulder, if it goes sideways for a while, then the shoulder really isn't as pronounced, I would say. Right. I want to see that retracement and then failure relatively quickly, compared to the other shoulder.
It would really be like the Heisman pattern, right? It'd be like
that's right. Right.
Shoulder Heisman pattern. If we go sideways, we got to trademark that one time.
Yeah. Right. Oh. I was going to show you the baseball I have signed by the first Heisman winner, but it's not an arm's length.
Wow.
Yeah.
That's impressive. All right, let's go to gold really quickly because gold is selling off here. We're below VWAP here for the 3rd candle in a row, 4th candle in a row. Trend line is holding strong. A lot of price separation between the trend line and the price right now. We're bouncing up against that lower standard deviation band. We have that same volume node here, Tom, that we should worry about.
Yeah, and this is one of those things where in a sideways market, in a constrictive market, whatever you want to call it, consolidating market, this could be range bound, right? Now, I see 2 things. This could be the bottom of the range that Jim has identified with that beige area, but it's still lower lows, lower peak lows, lower peak highs. This just might be a grind down too. It's not giving us a lot of evidence of which way it wants to go. Is it going to be range bound or is it slightly down? I don't know.
Yeah, I mean, the trend in gold from an intraday point of view is so strong. it's really hard to do a counter trend trade in gold, which means go short, even though the chart's saying there's potential in going short.
Right. And Jim, you could even draw another trend line. I don't know if you've seen this on charts where you have a trend line with a certain slope, right?
Mm-hmm.
And then it hits that, if you go another downward angled trend line on the top, but go to where you drew the first, the second, not the first, but the second one. Go from there and go to the, no, don't go to the lows, go to the highs. Go to the highs that were about an hour ago.
Something like this.
Go a little higher. Yeah, that one, right? So what happens is, I've seen that where people will use kind of where did things change, right? So we were trending this way and then it got accelerated to this way, or on the upside, you might see it going shallow and then a little steeper. It just gives you a couple areas. If we revisit that first trend line, where's the next area of resistance, right? We break through that first trend line we meet. Where's our next target on the second trend line?
Yeah, I like that. And I'm gonna further up our game here a little bit.
Okay.
So I'm gonna say, what's the recent trend? What's the recent trend? And I'm going to say it's high to low. And again, right where the intersection is of the trend lines we just drew, that's that most recent high level. And I'm going to draw it down to the bottom wick here. And I'm going to see a little bit of a retracement brewing here as well. So where does this intersect with my retracement? Well, it's going to be close to that 37.5. So let's go ahead and just make it a little bit longer.
There you go.
As time goes on. So yeah, this is a tough one. I'm going to keep my hands in my pocket here. Every instinct of my body says, Jim, go long. We're going to rally back up to that VWAP, but I know better.
Well, it also is time horizon, right? I mean, we tend to be a little bit longer just by our nature. Nothing wrong with saying, look, I see this rebound. I'm going to just go long, maybe at market, right? Maybe it isn't a breakout. Maybe it's market. And then try to get halfway to the VWAP, right?
Yeah. Now, having said that, it's reasonable. It could go to VWAP, right? There's two areas of interest right there. You have the previous session's highs, you have the 50% retracement, and you have the VWAP all about the same price. So it's very reasonable that it could go there. Now, I'm going to draw another area of support, which has now become resistance, really short term. See if I could thread the needle here a little bit.
Oh, there you go.
And so we're right there.
Yeah.
A lot of stuff happening in this gold chart, Tom.
Yeah. I think it's a range bound day. I wouldn't fault you if you went long here.
Yeah, not doing it. I refuse to do it. Let's talk about, we have a lot of great stuff coming up today, right? We have Craig Bewick coming up next from the CME group. We're going to be talking about the NASDAQ. And then we have, who's our second guest today, Tom?
So Alex Cole from GoNoGo Charts, my friend and yours, he'll be coming back at Traders Workshop. We'll be talking about how momentum oscillators figure into the work that he does, and we'll take a look at some markets through the lens of his indicators.
Sounds good. I have Blue Putnam coming tomorrow. We're going to be talking about commodities tomorrow, which should be a lot of fun.
Right, and Anthony will be back. Anthony Draker will be back.
Oh, he's my favorite.
Talking about support resistance. Yeah, it's great to have Anthony back.
Oh, man. All right. Well, yeah, and that's just the start of the week. We don't need to have probably time to go into the whole rest of the week, but we have a lot of stuff going on. So it's going to be a good week. Appreciate everybody being here as well. Gold is starting to move up here. Let's go do a lessons learned on our trade because it's going against us here in the NASI. Micro NASDAQ. Let's see where we're at.
Did we get our second unit? That's the first question.
Yep.
You did.
I heard the ding. And look at that. The Tom Schneider stop so far has survived by a couple ticks. I shouldn't say your stop. It's Well, that's okay. So this is going to be a good lesson learned because that's the thing about the micro NASDAQ. You get these big shadows on the tops and on the bottoms of the candles. My opinion is way more pronounced than maybe the mini S&P or some of the other markets. And as a result of that, you have to be careful where you put your stop because you can get whipsawed, right? You get stopped out and it goes back your way. So this is a conservative stop, what we have going on here.
Yeah, I look at it another way, Jim, too, which is tricky, right? We have a bias. We we have an opinion, right? We have an opinion that we're going to go short. We've expressed it by getting 2 units short. And the thing is, you put your stop in as a protection, right? And you could use all the logic you want, but really what's happening in the dynamics of trading when we approach that stop? Well, we've got higher highs and higher lows. Goes against our original thesis, right? We want it to be the other way. We want lower highs, lower lows. We want to hit our target. But we run that risk of these, we're wrong. And it's just a matter of kind of what your risk tolerance is when you are wrong.
Right. That's exactly right. And, putting your stop in is best practices. You got to do that. One of the beauties of the micro, right? So right now our unrealized P&L is $80, $91. If these weren't micros, it would be $830. And I would be sweating like crazy.
Yeah. So we can look at the charts all we want and say, wow, there's a volume gap here and there's a VWAP band there. But we also have to think about what is our risk tolerance? What can we afford to be wrong about and still feel good about coming back to trading? And sometimes it's hard. It's easy to overlook that when you're trading on a sim account.
Yes, for sure. And when you're practicing, you should practice like, what you're going to do in real life, right? That's the point, right? You practice like, if you're a baseball player, you're, in the major leagues, you're not going to practice with a wiffle ball.
Right.
You're
right.
So, and I've seen so many people say, yeah, I did a 200 lot in the S&P. I made $1 million in sim mode. I'm so ready to go. Well, that's not realistic, right?
Yeah. Yeah.
So, all right. So that next, we got stopped out at the very end of the last 10-minute candle. And then we have continuation buying, plowing through our area of our weakness here, our volume weakness right now on this new 10-minute candle and then some. So this is don't forget to cancel the stops. Oops, well, we're way out of time here. But anyway, that's the lesson learned, guys. We're
over
time.
time.
We're over time. We're gonna go ahead and I apologize, my bad. We're gonna go ahead and take a really quick break, and we're gonna get Craig Bewick in from the CME group talking about the NASDAQ. Be right back.
Can't wait.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
All right, we are back. CME Group Market of the Week. We are joined by Craig Bewick from the CME. Craig, good morning. Good to see you again.
Good morning, Jim. Glad to be back here.
How was your weekend?
Good. We spent another weekend in America's heartland out in Des Moines, but probably the last one for a while.
So were you there during the basketball game for the women's?
So last year we were actually in Iowa City, coincidentally, on our way back from Des Moines, and it was kind of electric on campus. And so last year because we've been spending so much time there, we've kind of become fans. It's hard not to become a fan of Caitlin Clark and that team when you're out there all the time, because it's really cool how much energy there is in that state for that team. Like, more than the guys. It's pretty cool, actually. So we've become, pretty big fans of the basketball team because when you're out there and you're at the bar, that's what people watch.
Yeah, no, for sure. Iowa's very supportive of their events, right? There's an annual Bike Across Iowa event where, it takes several days, and you stop at a community along the way, and you put your tent up, and all these communities are really, really supportive of the riders, and a lot of charity stuff going on, and really contributes to the local economy, and that's how Iowa is.
I'll say, like I said, we've spent a lot of time there in the last year, and one thing I will say vehemently is that the people there are very nice. Like, and it's not a stereotype. It's, you go there and people are on the road, they're friendly, and the restaurants, they're friendly. It's a nice community.
Yeah, absolutely. Absolutely. Well, appreciate you joining us this morning. Oh, by the way, Gamecocks are champions. So sorry.
That's right. Your adopted team, right?
Yeah. Anyway, let's talk about the NASDAQ. So the NASDAQ 100 in particular, right? And it's the largest of the 100 biggest by market cap companies that trade at the NASDAQ make the NASDAQ 100, right?
Yeah. And, you can see it's a market cap weighted index too, right? So, when you look at the companies that make up, really a majority of that, you kind of get into that, what they call the Mag 7 now, right? If you stack rank the companies and what they contribute, you kind of get into a big part of that being the new Mag 7, right? Which, a number of years ago it was FANG, right? Now it's the Mag 7.
Yeah.
That's kind of what you get into, right?
Yeah, for sure. And so just if you don't know what market cap is, it's a really simple calculation. You take the number of shares that are outstanding and you multiply it by the price, right? So it changes, day to day, but you multiply by the price, and then you get what's called a market cap. And there's different categories. There's large cap, there's mid cap, there's small cap. As an example, there's mega cap, which is a market cap over 200 billion. It's just a category, and the Mag 7 that you mentioned, they're all mega cap stocks.
Right. And I think it's important when you're contemplating trading a product or an index like that you have some idea. I mean, I think intuitively, most people that are in the financial markets or they're trading kind of know that NASDAQ is a little bit synonymous with technology stocks, right? People kind of associate the NASDAQ with technology, and the S&P is a broad-based index, and the Russell 2000 is a small cap index. But it's interesting when you kind of dig into it just a little bit. When you're trading something, the top 5 names in the NASDAQ are Microsoft, Apple, Nvidia, Amazon, and Meta. And we saw kind of the year over the last 12 or 15 months. We saw the year that those stocks had in terms of price appreciation. Particularly, I think Nvidia, right, has stolen a lot of headlines because of the AI concentration or benefits of AI that they've had. But, so it goes to kind of follow then that the NASDAQ future, the NASDAQ index itself is going to be very highly correlated to the performance of those, let's say those 7 stocks that make up what, the financial press seems to call the Mag 7 these days.
Yeah, and if you think about it, and we think about AI, we think about the chip business, right? So Microsoft, Apple, Alphabet, Amazon, Nvidia, Meta, aka Facebook, and Tesla. Those were the 7, right? So 6 of the 7 anyway. Maybe not so much Tesla. Maybe Tesla
Right.
are going down that AI route and that chip requirement, right? So when we talk about the chip development, that's going to be an important thing on these, I guess, tech companies, you'd call them, or non-financials is really the definition, but tech companies.
Yeah, for sure. I mean, that's, really that's stolen the headlines, I would say, over the last year. And I think for good reason. I think it's hard to find a company now that isn't, if they're not actively pursuing, their AI progress or projects, I think it's hard to find one that's not, because, I don't think it doesn't seem like it's hype, right? I mean, with everything that's going on. So it kind of feels like one of those you have to adapt or get left behind a little bit, at least at this point.
Yeah. So that kind of characterizes the index itself, right? I mean, if you go to number 40 on the list of 100 of the large caps, you get this company. It's a Dutch company. It's called ASML Holdings, and they develop what's called photo lithography machines for making chips. They basically are using light, some kind of light machine, so that the actual design on these really small nano chips could be laid out properly. And that's number 40.
Right. And I learned something this morning, right? I couldn't have told you what that company does before we got on, but that's, I think that's a symptom of what's going on I think is the point you're making, right?
Yeah, no, for sure. And then, my last little factoid I learned last night while I was sitting on the couch watching stuff, Taiwan chip maker, TSMC, is getting about $6.6 billion from the U.S. to finish that manufacturing facility in Arizona. I don't know if it's tax credits or direct subsidies or what, but that really has put an exclamation point on what I'm trying to point out.
Right. That's the Taiwan Semiconductor company, right?
Yeah, it's a Taiwan company locating building a facility in Arizona. So TSMC symbol. In any event.
Yeah.
So let's talk about the futures side of this thing, right? So we've got a few different flavors of futures contracts, right? The classic, the mini, and the micro.
Yeah, exactly. Like as in a lot of our products, we've had the E-mini for a while. In fact, we're coming up on 2 big anniversaries for both the mini and the micro. The E-mini NASDAQ turns 25 this fall, I believe. And the micro equity index, including the micro E-mini NASDAQ, will turn 5 years old in next month in May. So it's hard to believe, one, for me, that was already 5 years ago, because I was here when we launched those. I remember it like it was yesterday. And it's already been 5 years since we launched the micro futures contracts on the S&P, NASDAQ, Dow, and Russell. So, but yeah, we have a mini NASDAQ and a micro NASDAQ future, and we have mini NASDAQ and micro NASDAQ options. So we have options on both of those. And the difference is, and we've kind of touched on this in the different products that we've talked about on this show, is simply the size, right? Even though the bigger of the two contracts is called a mini, the E-mini NASDAQ, it's 20 times the index value, which I think at today's levels is over $350,000, if I'm not mistaken. Where are we trading right now in the?
So right now the NASDAQ's trading around 18,345.
Yeah. So at $20, with a $20 multiplier, a one lot in the E-mini NASDAQ, and I heard you saying before when you were looking at your trade this morning, a one lot in the E-mini NASDAQ, or one contract, is essentially $360 thousand worth of exposure to the NASDAQ. So in a lot of ways, that's not really a mini, which is kind of why we launched the micros 5 years ago too, is that the price appreciation in these indexes had made them bigger, much bigger than they were when they were launched back in the late 90s. So we introduced the mini, or the micro, which is 1/10 the size of the mini. So instead of a $20 multiplier, it's a $2 multiplier on that index. So again, instead of $360,000, it's $36,000 worth of exposure to that NASDAQ index with one contract. So, I think it's a lot more manageable for individual traders, when you kind of break it down to that.
Yeah, well, I do have to warn everybody, that's still a lot of risk, right? These are still leveraged contracts. It's a lot of risk compared to how much margin you have to put up to hold positions or establish positions. The micro NASDAQ right now, Craig, has done 727,000 contracts.
Has today, I'm sorry, you said how many?
Today, 727,000.
Yeah, I mean, it's really, I think we called it the most successful futures launch that we've had at CME 5 years ago when we did it. I remember I happened to be in the Toronto airport stuck on the Sunday that we launched these products. And we were pretty excited about them from, a perspective of where I work at CME. It was something that we had waited for a long time, so there was some anticipation. And back then it happened. And the only reason I remember this is it was a Sunday on a weekend when then President Trump had tweeted about Chinese tariffs. And it was one of the first times he tweeted about imposing that. So it introduced a lot of volatility into the market for that Sunday open. And then you start thinking, is it going to be too volatile? And our, the market maker's not going to be able to make markets. Well, everything kind of worked out as well as it could. And I think we did, 300,000-400,000 contracts on the first day that we launched those things. And it really has kind of gone up from there. And like you said, Jim, we've already done, 750,000 today, or at least close to that. So they've been really successful. I think, they've served to introduce futures to a whole new universe of people who, quite frankly, didn't want $350,000 worth of NASDAQ exposure with one contract.
Yeah, wildly successful. I mean, almost not every single day, but almost every single day, there's more volume in the micro NASDAQ than even the 10-year note, which right now is doing about 1.2 million. So it's pretty busy today, but still that's an impressive track record.
Yeah, and you bring up a great point too with the leverage, because like all futures contracts, the micros and the minis they have inherent what we call capital efficiencies, but put another way, it's leverage. So in order to hold that, let's take the E-mini, for example. I think the margin right now, or the performance bond on an E-mini NASDAQ, I think is just shy of $20,000. So in order to hold that overnight, 300 and let's call it $60,000 worth of exposure, you only have to put up $20,000, which is a great use of your dollars, right? It's what we call, they're very capital efficient. But you made a good point, Jim, and you actually made it in your last segment too. I heard you say, well, we're down $81 on our micro trade. We would have been down $800 on our mini trade. But I mean, it turned out that's a great example of what we're talking about, right? And it just makes it a little bit more manageable.
Yeah. And the other thing for me anyway, from the lens of being a day trader, is the ability with all the micro products, but this one in particular, the ability to do two things that you don't have the ability to, depending on the size of your account and your risk, your risk threshold, is the ability, number one, to scale in to a position with a multi-contract strategy, and also to place your targets and stop losses further away than you regularly would because of the smaller size contract, giving you a little bit more duration on the trade. So those are the two things why I love those contracts, right? So me and Tom did a 2-unit trade this morning. We got stopped out. We'll do a lessons learned later on today to see how good or bad our stops were. But by being able to move your stop a little bit further away, be able to scale in, it gives traders the ability to take advantage of these ranges that you see time and time again.
Yeah, and we talk about that scaling benefit to the micros all the time when we talk about them, because you don't have to, maybe you're someone that's because of your account size or your risk tolerance or your trading expertise, whatever, maybe you have the risk tolerance that allows you to put on one mini's worth of exposure, but you don't have to do that all at once with the micros, right? So maybe you're comfortable with $300,000 worth of exposure, but you can get there by, like you said, either scaling in or out of a position. You might have a big position and then you can sort of take it off with micros, sort of piece by piece, if you will. So I think, like I said, I think that's one of the huge benefits of having introduced the micros, is it gives you that flexibility in the way you're executing your strategies.
Yeah, and it's a benchmark stock index future throughout the globe, right? It's quoted all over the place. There's global participation in these markets, right?
Absolutely, and I think one of the reasons I brought up that sort of Mag 7, in addition to the fact that it's such a big part of this index, is that, and again, kind of sort of circular, but I guess because it is such a big part of the index, if you run like just a quick correlation in Excel, for example, like a spreadsheet program like Excel, I think you'll see that the NASDAQ and that basket of 7 stocks is correlated to like high 90s, like almost 99% correlation. So it's going to give you that sort of, it's a bit of a proxy for kind of how those Mag 7 stocks are performing. Now, of course, we all know that, those 7 stocks performed so well last year. I mean, that was, if you turned on any financial news program, you would have seen that. So it's going to, those are going to, if you were trading the future versus like a basket of stocks, the stocks are probably going to be a little bit more volatile though, right? Than the broader index. And in fact, if you go back to 2022, the NASDAQ was down that year. It was down actually a relatively large amount, but it wasn't down as much as you would have been had you been trading like an equal weighted basket of those 7 stocks. So it kind of gives you that exposure to those names, and takes, generally speaking, statistically, is going to take some of the volatility out of having those single names on. Does that make sense?
Yeah, a total sense. To your point, diversification is key here, right? So let's just talk about 2024 year-to-date performance. Google up 10%, Amazon up 18%. My numbers are day or so old, so don't freak out. Apple down 12%. Meta, Facebook up 40%, Microsoft up 12%, Nvidia up 80%, and Tesla down 32%. So of those 7, two of them are down quite a bit from an ordinary investment point of view, right? It would bum people out.
Yeah.
But the other five are up. So that diversification kind of helps, whether you're trading, the basket or you're trading the futures, helps kind of smooth things out.
Yeah. And maybe to put it even in a different context, we went back and looked at a few years of, again, like of an equal weighted basket of those 7 stocks versus the NASDAQ. And, one thing you found is if you then translate like the daily closes into dollars, the biggest max down day or max loss day on the basket of those stocks approached 20, and this is against an E-mini, approached $20,000. Whereas the E-mini, I think the biggest move was about 7,000. So again, generally speaking, the index is going to take some of that volatility out of the position, and you still get exposure to those names because they do make up a big part of the index.
All right. So speaking of volatility, you sent me something to share here on my screen. Let me see if I could make it so we could.
Yeah.
20-day historical volatility, E-mini, S&P, NASDAQ, Russell.
So a lot of times when we talk about volatility, I'll talk about implied volatility, which is a measure of what the options market is pricing in for the future price of an underlying. This is a little bit different. This is historical volatility. So it basically, this is 20-day historical volatility. So this is an annualized measure of what's actually happened instead of implied volatility, which is, like I said, kind of a forward-looking measure of volatility. And I just thought it was interesting because it compares the what's happened, the amount of price movement in the E-mini S&P, the E-mini NASDAQ, which is the orange one, and then the E-mini Russell 2000, which is a small cap stock. So you can see, generally speaking, at least lately, the Russell has had more price movement than both the NASDAQ and the S&P. But you can also see that the NASDAQ, at least over the time this is the last year that I ran. So over the last year, the NASDAQ has been more volatile than the S&P. And in fact, if you look at the volume in the micro NASDAQ and the micro S&P, the micro NASDAQ actually outtrades it at CME these days. We actually tend to do more volume in the micro NASDAQ than we do in the micro S&P. So I just thought it was interesting. And the other reason I wanted to bring it up is because, we talk at the CME a lot about how index choice matters, right? And I kind of said it before, but you've got the Russell here, the gray line, which is small caps. You've got the NASDAQ, which is the technology stocks, and then the broad-based S&P. And what that the opportunity that provides traders is that they, maybe you don't have a view on the NASDAQ in terms of getting long or short, but you have a view as to what the NASDAQ might do relative to one of the other indexes. And having and I didn't include the Dow here, but having all 4 of those indexes allows you to trade one against the other. And I think maybe the most pronounced example of the disparity in the indexes happened around COVID. Because if you remember right, when we first had the lockdowns in March of 2020, everything sold off, right? Because we were in unprecedented times for most of it. We'd never had a global economic shutdown like we had there. So naturally, I think it was fairly normal that, kind of everything sold off initially. But then what happened is you started to get these like, quote, stay-at-home stocks and the tech stocks. And people thought, wow, some of these stocks could actually benefit from this. And all of a sudden you had this,
Go ahead, keep going.
You had this rally in the NASDAQ where the small cap Russell really got, kind of stayed lower, kind of stayed with that sell-off. But then, that later that fall, we had the vaccine news and all of a sudden people thought it might be ending. And you kind of had that trade reverse, right? Where the NASDAQ sort of sold off relative to the Russell as people thought the economy might start to open. So anyway, I think that's obviously a very, pronounced example of the difference in indexes, but I think it's a good one to point out and to show kind of how they're different and why you might want to look at all 4 of those indexes.
Did you buy a Peloton?
I did not. We set up a gym that was it was a lot more rocky than Drago in our basement. A very crude. Our COVID gym was very crude, but Rocky wound up winning at the end of that movie anyway. So maybe he had the right
There
idea.
there you go. Well, I did the poor man's version of the Peloton.
Peloton.
I did a Schwinn, like a Schwinn, similar Schwinn bike without the monthly subscription. So it's sitting here. It's got a lot of dust on it.
We actually bought an assault bike, which is like a newer version of the old Schwinn Airdyne, the fan bike with
yeah.
It's been made popular again through some CrossFit workouts and stuff like that.
Yeah, but that's for real athletes. The fan bike. That's for real athletes. My wife used to have one of those. She was an ultra marathon runner, and that's challenging.
It's a good workout.
Yeah.
But yeah, so anyway, go ahead.
No, so let's go back to the Magnificent Seven just for a second. If my memory serves me correctly, they're also part of the S&P 500, right? So they're in two stock index futures.
Said, mega cap stocks, right?
Mega cap stocks, right? Over 200 billion. And the lowest one in that seven is Tesla at what, 550 billion, and the highest is Microsoft at like 3.3 trillion. So these are super, super big, and they're in both indexes. And you do get a little bit more diversification with the S&P 500. There's 500 instead of 100, right? And it's and their calculations a little different. But these two things do move in sync when these top seven companies, big companies, have some event that's positive or negative.
Yeah, I mean, generally, like I said, if you excuse me, just take a simple correlation. In Excel, you can use any sort of spreadsheet program like Excel, and you look at just a simple price correlation. It's in the high 90s, I think, when you look at like that, like an equal weighted basket versus the index. But the other thing too to keep in mind is when you're trading futures, you might want to be short these things, which I think you were this morning, right? Like, and when you're trading futures, there's no borrow costs, there's no locate requirements, there's no pattern day trading rule and things like that. So, there's different ways to get exposure to the technology sector. But one of the nice things about futures is all of those things are true, right? If you want to be short futures, you simply sell them, right? And you don't have these requirements like you do in the securities world. If you want to be long, you buy them. In addition to the capital efficiencies that we just talked about.
Yeah, you're not borrowing money from your broker to go short. You don't have to have a certain amount of money to get a NASDAQ level 2 trading ladder, and we have the Superdome, right? And so that's when people say, well, CME Group, it's like it's a capital efficient way for you to trade. That's really true.
Yeah, and when you're shorting securities now, we have an interest rate, right? We didn't have one for a long time. Right, now we have an interest rate, and so you've got those borrow costs start to become, I think, a little bit more material.
Yeah, no, for sure. So, but they're great markets. We look at them every morning, all the CME Group stock index futures together, including the Russell. We talk about systematic price movements, and then movements outside of systematic prices, unsystematic price behavior, which could actually trigger position trades swing trades where you could buy one stock index future and sell another stock index future, creating a spread.
Right. And that's kind of what I was getting at before with that example of like the NASDAQ and the Russell, right? If, generally speaking, if you look over a long period of time, you're going to see a positive price correlation among these four indexes, but that doesn't always hold true, right? Sometimes, again, it was an exaggerated example that I gave during COVID, but sometimes those correlations tend to or can break down. And when they do, you might have a view that they're going to continue to break down, right? Something, systemic has happened and it's going to continue. Or you might think, it's that whole reversion of the mean, right? Maybe these two indexes, the correlation of which has sort of broken down recently, is going to come back in line. And you can put a trade on with these futures contracts to sort of take advantage of that view that they're going to, quote, revert.
Absolutely. So we're almost up against time. Craig. I appreciate you being here. If anybody wants to reach out to Craig, there's a couple different ways to do it. You could either send me an email at learn@ninjatrader.com, LEARN at ninjatrader.com, and I'll put you guys together, or just reach out to the CME Group's website, and you're all over that.
Yeah, I am. I'm on LinkedIn, or subscribe to In Focus. It's our daily newsletter at cmegroup.com/infocus. I write a editorial paragraph in there every day. So yeah, any of those ways will work.
Awesome. Well, I appreciate you being on here. We're going to see you again next week. In the meantime, you have a great week, Craig. And
thanks.
You are welcome. Thank you. And coming up next, we have Alex Cole, GoNoGo. We'll be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Well, welcome back to Ninjatrader Live. I'll be your host for this segment. Tom Schneider, CMT with Ninjatrader, and this is the Traders Workshop segment of the program. And in the past, we've featured Ninjatrader ecosystem partners. Today's no different. We welcome back co-founder of GoNoGo Charts, Alex Cole. How you doing, Alex?
I'm doing well, thanks. How are you, sir?
I'm doing great, doing great. Good to see your shining face again. Are you ready for the eclipse?
Well, it's been a mad dash around here to try to get glasses. Everybody's sold out everywhere, and I heard you can make a viewing device out of a cereal box. So we'll see what we end up doing this afternoon.
Yeah, there were even warnings of on the news this weekend. Make sure you get, approved glasses, not the knockoffs
Right.
from the
Yep.
convenience store. But are you in the path of totality or pretty close?
I think we're close. Yeah, about
Yeah.
318 today. I think we'll see. It's funny because we've known about it for how long, right? And then of course on Saturday, I'm like, oh, I should get some glasses.
Then nothing, right?
Nothing. Nobody has any. So I think my wife's very good at sort of finding things like that. So she's on some Facebook groups and seeing if any of the other mums have any glasses, and I'm sure she'll rustle up a pair or two. We'll see.
Oh, that's great. Well, that'll be an interesting event today. See what happens.
Yep.
But let's talk about GoNoGo Charts. So you've been on before. We're glad to have you back, and just maybe just give a quick explanation of why you started GoNoGo Charts.
Absolutely, and I'm sure at this point, hopefully, some people have seen this before, but the goal was to remove analysis paralysis, or to try to get away from the problem of complicating charts. We've all done it. We've all seen it, where you get fascinated by some of the amazing tools that we have in our industry, and technical analysis is just such a wonderful way of looking at the markets that we get carried away perhaps with adding indicator after indicator onto our charts, and then they become hard to read and hard to explain to other people, or overwhelming even for ourselves when we're trying to understand the markets that we're looking at. So what we wanted to do with GoNoGo Charts is create a way to get all of the technical analysis that we find valuable, but blend it into a simple chart that allows us to still see the forest for the trees, so to speak. So last week, I think we went through the process of trend identification and how you might build that list of sensible analysis to put the weight of the odds in your favor. But then we showed how GoNoGo Trend does that in the background and keeps price at the forefront. So I thought today we might do the same thing, but looking at momentum analysis, and you can really get a lot of value out of looking at momentum tools. But of course, you end up in a similar situation.
Yeah, and I kind of look at the tools. I have four sectors that I kind of segment technical analysis into, and there are probably some edge cases which kind of fit outside these, right? But for the most part, I think it was smart to start with trend, because that's what we're trying to do as traders, catch the trend to our benefit. But the next in line is momentum, which measures the strength of that trend. The other two, volume and volatility, we'll address at another time, but I think momentum is a smart way to look at it. And you're right. So you could be introduced to a study and say, wow, this is interesting, this is great, read up on it, do your research, and then somebody says, well, have you looked at this? And oh, great, that's interesting. And lo and behold, after a while, you do that enough and you've got that paralysis you talk about.
Yeah. I mean, to your point, I think trend identification is the most important thing we can do, right? Because we can trade in the direction of the trend. We can make money off that, the meat of that move. But the second place, almost always, you're going to go looking is momentum. And that's what we find working with clients. That's what we find ourselves, because it tells you so much about the strength of the trend, the velocity of price movement, and the acceleration or lack of in terms of how quickly price is moving can tell you so much about the health of the trend. So we do a lot of work in momentum analysis, and we'll talk about how that factors into the GoNoGo charts. But if you want, we could just go through talking about a couple of those indicators that people might put on the chart.
Sure. Yeah.
I don't know if anybody would argue that RSI may well be the most popular, right? So we could put that on the chart, and of course, RSI gives you that sense of overbought and oversold, and that when a movement is extended, then perhaps we may bet on some sort of mean reversion. But of course, momentum analysis, momentum change doesn't mean trend change necessarily, but some sort of, perhaps counter trend movement, or the idea that prices move too quickly in one direction. And you can see that here in sort of the middle of the chart. We've had that high in RSI, and then you can see that price struggles for a bit. It doesn't always reverse, but it moves sideways or it falls away from the trend before the trend goes again, and that's an important thing to understand. when you see these overbought levels in price, that doesn't mean necessarily we're going to see a trend change, but that momentum has waned. That speed of price movement higher has slowed down. And you can, the good thing with momentum we like to talk about is that they're calculated differently because they're trying to capture slightly different things. You can look at RSI, which we just had on there, which is, of course, looking at the average moves up and down and seeing how much they've moved up and down. So you imagine looking back over 14 days, if every day was up and it was up a lot, you're going to have a high RSI reading. Stochastics that I put on here now is a different way of understanding momentum. And it is a way where you sort of look at the current price and say, how high is the current price relative to a look back period? And if that price is high relative to its look back, then you're going to get a high value of stochastics. So again, you start to line these up and you can see that sort of same period, we've got highs in RSI, we've got highs in stochastics. Stochastics stays high though, doesn't pull back as much. So there's these variations in the way these oscillators move because of their different calculations. But we can keep going. We can add, a lot of people put the CCI on the chart, Tom. I know that that's a popular one. We have money flow as well. That is a slightly different way of looking at momentum because it incorporates volume, right? So that idea of market enthusiasm, understanding that, okay, there's been a move in price. Is there much volume behind the move? And so, those are just four, right? I mean, how many are there? I don't know. We've all seen platforms with, hundreds of indicators, and they all do something slightly different. So they are valuable, and we want to get that information. But we know that adding more and more sometimes can be redundant, right? We're looking at the same thing here, but then they can also be conflicting. Sometimes, here in the money flow, we didn't go overbought. On RSI, we never got oversold, but we did on stochastics. So, there's that little bit of conflicting information. There's a lot of redundant information. And we imagine now, if you go back to last week and add what we added for trend identification on top of just these four panels, now we've got a very busy chart. And it becomes hard to read. So you can keep going. A lot of people will put Bollinger Bands on the chart. There are, of course, many, many other oscillators. Williams percent R is a popular one. And you can keep going. But then, of course, what happens is your price panel, if you imagine we put another 2 or 3 panels on here, your price panel starts to look like this. And now you can't see those important moments, supply and demand, trend analysis, looking for support and resistance. So it just becomes overwhelming, even though the information you're looking at is really powerful.
Right. And I do want to reiterate one of your points, which is, any one of these oscillators can be very legit. I don't want to say legitimate, but viable, depending on the market you look at, right? So money flow oscillator being incorporating volume might be a little bit better suited towards a market that has volume than one that is kind of sporadic, whereas RSI might be better for this market or that market, although it seems to be more general, right? It applies to any data set. So that's why you see it more often. So, don't want to say that, any one of these is better than any other else. It's really what you decide is good for you when you're looking. When I came on to Ninjatrader, Jim was using a CCI because that's what he learned for the market, and he knew it in and out, and so it worked for him, right? Whereas I don't use it as much. I would have to do a little bit more research and observation and find out what works for me. But you're right. It's easy to say, wow, that there's benefit to this oscillator. I'm going to throw it up on my chart. Oh, there's benefit to this one too that I just learned about. I'm going to throw it out. Oh, did you see somebody's alteration or version of RSI that's different? I'm going to throw it up on my chart. Yeah, you get a pretty ugly looking chart after a while.
And I think the other point that you want to mention here is that it brings in a lot of subjectivity again, right? Even though these indicators are mathematically calculated, and that's so powerful, you start to tweak them yourself, and that brings in subjectivity. So I know people that I work with that say, yeah, well, I change the overbought and oversold levels on RSI when I'm looking at a certain market, right? Like maybe when you're looking at the foreign exchange market, maybe you move RSI from 70 and 30 to 75 and 25, like depending on how quickly that market moves. So you start to bring in subjectivity because then you change the levels that you feel are important for identifying those conditions. But just to reiterate quickly, a couple of things we're looking for when we do momentum analysis are those extreme swings, overbought and oversold, but also divergence too, right? So the idea that you are making higher highs in price, but perhaps not confirming that with higher highs in an oscillator is a situation that we look for. So we want these moments. We want to understand when we're seeing areas of overbought and oversold. We want to understand when we're seeing momentum divergence. We also, Tom, want to understand how to use oscillators in trend. And I think that's even though there's been a lot of work done there, that's sort of perhaps unused when we're dealing with momentum oscillators. So for example, if you're looking at this sort of nice trend in the E-mini, you can see that RSI never goes oversold, right? It ranges from overbought back to neutral territory, overbought back to neutral territory. And that's really a powerful concept, because if you think about it, if that trend up is healthy, we shouldn't see any excessive selling, or we shouldn't see too much enthusiasm to the downside, which would give us oversold conditions. So then you get into a whole nother area of analysis where you're trying to identify ranges. When we're in a trend, right, does RSI go from 80 to 40? Do we look at 50, above 50 as support for RSI? And we can start to subjectively put support levels in our oscillator to try to determine whether or not this is just a pullback in a trend or whether it's something more significant. And so those are sort of the three ways we want to use oscillators: looking for extreme swings, looking for divergence, and looking for support in trends. But it becomes quite difficult because all of the indicators move in different manners. They move quite fast. What do you do if RSI goes to, you say you establish a range of 40 to 80, but it goes to 38? Is that a break? Is that support? Is it close enough? What if it goes to 41? Is that a touch of support? And so, of course, then you're ending up being much more subjective in your analysis than perhaps you'd like, as well as clouding your chart with indicator after indicator after indicator. So that's where we end up a lot of the time when working with clients. And that was the problem that we were sort of trying to overcome with GoNoGo charts.
Now, in doing so, right, the solution, GoNoGo charts, you're not looking at every oscillator, right? It's not necessarily a matter of, well, let's just throw every oscillator into the bag and shake it up and see what we come up with. There is what is the word? I say, not tailored, but there is you've kind of put your expertise into which momentum oscillators seem to be the most appropriate for this kind of let's in the background do this analysis and serve it up in a meaningful way.
Yeah, in much the same way that we did with trend. It was over more than 15 years now of working with clients in the institutional space. What are the oscillators that they look at? What are the oscillators that we found to be most valuable when looking at markets? And that's where, so yeah, it's not just, hey, let's throw as many as we can on. It's let's take that same discipline checklist. Maybe let's take 4 or 5 oscillators that measure momentum in a slightly different way, so they give us those nuances that we were talking about. And let's blend them together into one oscillator, just like we did with the trend, so that we can still do our typical or our traditional technical analysis, but in a way that doesn't overwhelm the chart. So yeah, it's sort of curated, it's bespoke, and there's some proprietariness to it, but that's the checklist of oscillators that I found to be the most helpful when working with clients over the years. And so what you end up with now is the GoNoGo oscillator down here in the lower panel. And this is a blend, like I said, of some of the most robust and most used, sort of most tested oscillators, but we still use it in a traditional sense because of the value that we know is there in momentum oscillators. So for example, you can still see these areas of overbought lining up with these peaks in the market. Just like when you see RSI go overbought, those are going to line up with the peaks in the market. Now, same thing if we move back here and we find sort of the last time we were in a no-go, you see the oversold in here as the oscillator is moved down to an extreme of negative territory. So our oscillator goes from -6 to +6. We look at 5 and -5 as those overbought, oversold levels. And you can see how when we dip down to -6, that lines up with a trough in price. When we get up to these overbought values, that lines up. This is the same area we were talking about before where RSI was oversold, and that led to that sideways movement. I mean, overbought, sorry. That led to that sideways movement in price. But what I wanted to sort of, and of course, you can see divergence as well, right? We've got a lower high in the oscillator here, a slightly higher high in price. That leads to a little bit of a deeper correction. But that third piece is really where we find the sort of extra power in using the blended oscillator, because we designed it in a way where when all of the inputs go to their neutral territory, then the oscillator will fall to 0. So we now have an objective way to look at it when in trend. So instead of trying to find those ranges we were talking about, we know that in theory, the oscillator should stay at or above 0 when a trend is healthy, because there should be no oversold conditions creeping in to the blended oscillator. So you can see that when a trend is in place, we can now look to that 0 line for an objective level to see whether or not the oscillator finds support. And as long as it does, then we can sort of fairly confidently say that we're seeing signs of trend continuation, because we've got momentum surging again then in the direction of the trend. And you can see, interesting moment over here on the right, we did just dip into negative territory and we've regained that 0 line quite quickly. So it's going to be very, very interesting now to see whether or not we get turned away back into negative territory, or if we can get back into positive territory. But that's the idea with the blended oscillator, to give you still overbought, oversold, still divergence, but also now an objective way to look for support and resistance when in trend.
So Alex, it's interesting you say that. We were looking at this chart, the daily chart of the E-mini S&P earlier, and looking at, you know, what happened in the last week, and that retracement, that pullback on Thursday, that big move down, seemed to me it was a little more extended, you know, a little more extended pullback than we've had in this uptrend. You know, you could see the cycles, right? It advances, it pauses, or even pulls back a little bit before it does the next advance. Here, we're seeing the same thing. We had an advance and a little bit of a pullback, but the pullback seems to be pulling back a little bit further than it's used to. And that might be a crack in the dam that you're seeing now, you're saying, on your oscillator.
Yeah, absolutely. And it was a pretty big down day on Thursday, like you said. And you can draw, because again, there's nothing else on the chart, you can draw your trend lines on here. I know we're sort of really testing those trend lines now with these 2 bars. Today, so far, a good move, a sort of a good bounce. You know, if you know your candlestick analysis, we'll see what this ends up as, but it's looking quite interesting. But you can see we've had a string of these weaker trend colors as well. So this will be the 5th weaker aqua bar in a row. And like you said, these other pullbacks within this trend haven't been quite so extended. So we are going to watch now very carefully our oscillator to see if it does get back into positive territory, or if it now starts to find resistance at the 0 line. Because, you know, Tom, that's another concept in technical analysis, that of polarity, right? Once something has been support, then it is broken, it could well become resistance. So we see that quite a lot with the oscillator as well. And then just the last thing to point out here with the way the chart works is that we try to highlight these important moments, the interaction between trend and momentum, with the icons on the chart. So you'll see that we have these green circles are continuation icons, meaning that the oscillator has found support at 0 while in a trend. And then the triangles here are those sort of traditional overbought moments when we see, you can imagine RSI crossing back below 70. That's what we're seeing here with these overbought extended moves, and then the oscillator coming back into neutral territory. And then after these counter trend corrections, we'll then look to see if the oscillator holds the 0 line. And that's sort of the way the momentum works when in trend. So that's what those visualizations are on the chart.
Right. And one other thing that I think is important to see in the oscillator is right now that oscillator is a value of 0, not 1.
Yeah.
And that's because you're counting with that 1 how many bars, or how many, in this case, days, that oscillator is at 0, where there's no bias.
Yeah.
And it's kind of that, we probably talk about it on volatility a little more, but the longer it stays at 0, The question is when it does finally make a directional move, which way is it going to go? And we might see some trend movement there too.
Absolutely. So that's the go-no-go squeeze, which, like you said, we'll talk about perhaps coming up. But that's the idea of trying to identify a period of reduced volatility where there's little directional pull, either up or down, and we're seeing some sort of reduced price movements and some sideways action. And we're going to now try to count how many bars, like you said, in this case, days, the oscillator gets stuck at zero. You can see it happened here. We got stuck at zero. We saw a squeeze build. That's that volatility squeeze. And then we saw it broken into positive territory. And of course, that led to trend continuation. So a period of reduced volatility could be a continuation sign, or it could be a reversal. And so if we get a drawn out squeeze here, we'll definitely look to the direction of the break as a way to determine price's next movement.
So can we take a look at another market? Maybe we could take a look at micro NASDAQ if you have that, or even the Russell. Actually, let's look at the Russell, because the Russell's been behaving a little bit different, right? It hasn't been that nice slow grind. It's been kind of well, it's been a slower grind. It's been not a steep ascent, but it certainly hasn't been in a, I would say, I don't have the feeling that it's more of a bullish trend than let's say the E-mini S&P or NASDAQ. So I just wanted to see what we see now on your oscillator.
Yeah, I mean, you can see that it struggled with these new highs in a way that the other markets didn't, right? So we've had some fallback from, just trying to creep above these prior highs. And we can see on our oscillator that we've been in a go-no-go squeeze now for several bars. So we are seeing that buildup of sort of that tug of war sort of playing out on the chart. That's how we like to visualize it. We like to sort of to understand that that doesn't mean there's a lack of trading necessarily, but that there's a lack of directional momentum. So as we see this squeeze build, we're going to watch to see the direction of the break again. You can see it's been different in that there's been quite a lot of these squeeze buildups for the Russell. So a lot more sort of inability to really take off is what I think we're looking at with the Russell, and you can see that in the price trend, a lot more choppiness. But we're very, very important as well. We're going to be looking at this in a weak go trend, momentum stuck at zero, go squeeze building. It'll be important to see how it resolves.
Yeah, for sure. How about Bitcoin? Can you pull up Bitcoin MBT? Yeah, I saw that on your list.
Yeah, absolutely. So Bitcoin has just been a great chart. It's been fun to watch and fun to look at. You can see the cryptocurrencies we've talked in the past about how they tend to trade technically. Whether that's the lack of fun, some would argue that there is fundamental information, but definitely seem to trade technically. And you can see we had a go trend, we had a no-go correction as price moved back and a little bit sideways. And then once it broke back out of this go-no-go squeeze, we saw the uncertainty with the amber bars, then the go, and then off to the races for a couple of months. And you can see now what an important time it is, because since that last high here, we had a counter trend correction icon, that red arrow, and we've really struggled. We haven't gone anywhere other than slightly against the trend, or you could say somewhat sideways. So the oscillator, then we turn our eye down here to the lower panel and we watch as it hits the zero line. And we can see that it struggled to really get away from the zero line in either direction. And now we're right back at that zero line again. And we're going to see if we can hold that zero line as support. And if we do, then we'll be able to say that momentum is staying on the side of the go trend. And we may be able to look for price to take out or to make an attempt at a new high. If we've got momentum surging into positive territory, then we would certainly look for price to try to do that.
Yeah, you mentioned fundamentals. I would agree. It does tend to trade technically, except there are some fundamentals. One of them being today with the Bitcoin halving. Imagine if gold, you did everything the same, and instead of getting 1 ounce of gold, you got half an ounce for the same amount of work. That's what's happening with Bitcoin mining. Plus, you have all the regulation news that came out earlier this year. So you're right. It's technically traded, for the most part, but this year especially, it seems like there's a lot more fundamental news with Bitcoin. And interesting to see, that we're just starting to see that momentum indicator moving up
Yeah.
after consolidating for the last, I don't know, month or so.
Yeah, 3 or 4 weeks, it looks like. After that really strong move, it was almost as if people were waiting for this to see what would happen. Yeah.
Right. Well, Alex, we've run up against time as we usually do, but where can people find you?
GoNoGoCharts.com. Also, my email is info@GoNoGoCharts.com. Any questions at all? If you're interested in checking out the suite of tools for Ninjatrader, we have a free trial. So, get in touch.
Great. And, thank you for your time and coming on and, helping, our clientele and our new traders and our experienced traders learn a little bit more about what you offer and what the market has to offer in terms of technicals. So thanks again. And we'll do this again next week.
Yes, sir.
All right. With that, we're going to take a quick break and we'll come back with Mike Burke and the midday wrap up.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Hey, we're back. Welcome to Midday Wrap Up. I'm Michael Burke. I'm joined by Tom Snyder, CMT. Tom, thanks for being here.
Mike, my pleasure. Good to see you. How's your weekend?
Pretty good. We didn't do anything. So that's a great weekend. My wife didn't have anything planned for me. I didn't have to, pull weeds. It was fantastic. So
those are great weekends.
So today we have a total eclipse. I've been talking about the fact that I was in South Carolina for the last one. And if you've never been to a total eclipse, you probably have just kind of brushing it off. It's no big deal. I can tell you from experience, it was incredibly emotional, surprisingly emotional. If you've not been inside the umbra of a total eclipse, you probably missed it this time if you haven't planned for it. But the next time there's a total eclipse and you have an opportunity to go, I highly recommend it.
Yeah. And Mike, is it worth traveling for? Because I think the next one in the US is 2044. It's a while.
I would travel anywhere in the civilized world to go to. I wouldn't trek through the jungles of of South America or Brazil or Africa. But if it's in the northern hemisphere and I can get there on an airplane, absolutely, it's worth traveling to. I almost went to Texas, but in the back of my mind, I had this idea that this is a cloudy time of the year for Texas.
Yes.
So I did not book it. I heard that Maine. I've never been to Maine. Maine is the perfect place to have seen this. So I wish I would have thought about that earlier, but they're going to have clear skies. It's going to be a perfect weather for eclipse. So
we're about 200 miles from the nearest full umbra 100% total eclipse. There's no way I'm getting in a car now, of course. It's too late, right? But we have sunny skies here. So hopefully if you're out by the Northeast, like Maine, you will be able to see a pretty neat total solar eclipse.
So, even a 90% eclipse is pretty amazing. Just have to make sure you have the right equipment to see it. That's all.
Yeah.
So kind of a quiet day so far. All the markets are right around break even. They were a little better earlier, but right now they're kind of pulling back a little bit off of session highs. Just, I guess a typical Monday for April.
Yeah, E-mini S&P just over 500,000 shares at 620, 620,000. You're right. It's kind of I would say a normal Monday, maybe a little light, but looks like range bound trading to me.
I agree. Let's take a look at that 3-minute chart. So I've moved to 3 minutes, as you know. We'll see how long that lasts. But if you this is the 3-minute E-mini. That's the previous close. Is that black line there? If I kind of just scrunch this together, there's the high. So leading into the U.S. Open, we were rallying a little bit. And then we saw that pattern that I talked a little bit about, where we see some selling into the U.S. Open, and then anything can go after that. So the opening range was kind of range bound sideways. That's something you don't see very often.
Yeah, and that's kind of held, right? I mean, that's kind of, we've traded in above that opening range, but now we're coming back into it. And I think a lot of times the market wants to get back in that opening range because it's price happiness, as long as there's nothing moving that market. And today we know no real big news today, right?
No, exactly. And the thing is, you've got the VWAP right there as well. So this market has been kind of trading in that area since 7 a.m. Eastern time. So you've got the point of control, you've got the VWAP, you've got the previous close. Everybody seems to be happy right around that price, which is what, like 52.55 or so. So that seems to be the price of the day for the E-mini.
And that previous close, I keep getting drawn to it just because it was resistance early, and then it was, support a little bit, and then resistance again. Now it looks like it might be support. So it certainly is where the market might be trading around today.
So, I mean, if we assume that we still have a positive bias, this market is still in an uptrend, right? Mm-hmm. So intraday, is this a double bottom or even a triple bottom?
Yeah, I mean, you could draw a supportive trend line and say, yeah, it's a triple bottom with a slightly bullish bias. I think that's perfectly fair. And the question is, are we at that area where we might find some support based on the testing of those lows? They don't have to be a horizontal line, as we know. They could be slightly uptrendish, and I think that's what's going on today.
Yeah, I think so. Let's look at the daily real fast here. The subgraph that you see there, Tom, that's the VIX. So we had that spike up in VIX on that really bad day on Thursday, where we closed below the 21 SMA. You can see that spike in VIX. Now we're seeing, you know, a little bit of what I would call retracement or getting back to the mean, as we had a good day on Friday. Today, you know, right now it's mixed, but we're still above that 21 SMA.
Yeah, and that was a good day for the, you know, that Thursday might have been a bad day for the market, but a good day for the guess the close winner.
Yes, that's correct. So you had to get your guess in by Tuesday midnight, right? Tuesday midnight, meaning Wednesday morning, right? Before Wednesday morning. And the market was, you know, around 2250, 2260, just had a doji up candle. And our winner, you know, picked a price which was very close to that settlement price on Thursday of 51.97 1/4. He picked 51.91. That's amazing. I want to know what crystal ball he's looking into,
right.
And talk to him every day, because that was a really good guess.
Yeah, that was.
He's going to get a nice swag package, and you know, it'll be great. We're going to do something very similar later on this month, where we'd like to kind of get some feedback on what kind of charts you're looking at. You know what kind of charts we're looking at. We're going to reverse that. And I want to see what kind of charts, we want to see what kind of charts you're looking at. So we're going to have a send us your chart contest, and give us a little, you'll give us a little explanation of your thinking and your analysis. And then we'll pick a random drawing of emails and send out a swag package, and we'll talk about your chart during the show. It'll be fun.
Yeah, that'll be fun. That'll be like grading a coloring contest, Mike, but charts instead. And you know, we love charts, and it'll be fun to see what everybody else looks at.
I think it's fun to see what other people are looking at, and it's informative, because everybody has, you know, we talked about this. Everyone wants to make the analysis their own, and so you see what we're doing. You've probably looked at a dozen other people's charts, maybe more, and now you've come up with a setup that works for you. We want to see it.
Yep.
Let's take a look at the Russell, who's holding up the best today. Let's go back to, well, let's start with the daily chart here. So this is the daily Russell. We kind of had last week, we kind of had a little bit of a pullback right to that 21 SMA. And then we had Thursday, of course, was the big down day. Friday tried to recover. Today, we're trying to recover. We're real close to 2100, not quite back above that 21 SMA yet.
Yeah, so a couple areas of resistance, you know, support becomes resistance in terms of that moving average. And then you've got that 2100 level, you know, possible psychological level. And we've traded around there a lot, right? We've traded around there a lot in the last month plus. So it just might be, you know, the Russell's time to pause. But today, it's, you know, it's a different story today. It might be playing a little more catch up, trying to get above that moving average.
I mean, almost every bar in the last month has been around that 2100 level. So yeah, I think that's kind of where we're at. What's interesting today, which makes me think the Russell may be a little bit stronger than we think, is that 10-year yield futures, that is up significantly today, and that is not adversely affecting the Russell. So maybe the Russell would be much higher today if that wasn't the case. So that 10-year yield, we'll look at a little bit later, is over 4.4. It's up over 1% today, but yet the Russell is up. So I think that bodes well for the Russell heading into the rest of the week.
Yeah, and you know, that's the messaging that's coming out of the Fed speakers seems to be higher for longer, which again, like you said, doesn't bode well for the Russell. So the fact that it is up and beating the other stock indices, you know, that could be make a stronger case for the elements of the Russell.
Agreed. This is the 3-minute Russell. That blue line is the high. So, you know, early before the opening range, we were able to get above the high of Friday, which was a pretty good level there. Made sessions high here, right at the US Open, above 2100, in fact. And then sellers just brought it right back all the way through that opening range. Notice how the close of yesterday is such a strong support level there. Lots of testing some test drills with those wicks, but they could not stay above it. Nice rally after the opening range, above the high again. Point of control moves up very nicely there, but now we're kind of bouncing off of that, heading down to VWAP.
Yeah, and the question is, if it fails VWAP, Friday's close seems like a pretty good area of support.
So I'm gonna tell you a secret, Tom, and that is that actually the psychological level for this market is 2090, not 2100. Don't ask me how I know that. Well, all right, you can ask me.
How do you know
The
that,
way
Mike?
I know that is that if I move this down to 2090, look at what a strong level that has been, all the way going back even into last year.
Right.
So that is a super strong level for this market as far as support goes. I think we're going to bounce off of that, especially with VWAP there. And if this market in general ends up being positive today, I think this market is probably the market that'll benefit the most.
Yeah, and you can see it so clearly on that daily chart, that 2090. Sometimes today, the daily trading, you don't always see it as clear. My test, it looks like it's supported pretty well, right? It was supported pretty well, but you could see it very clearly on that daily chart.
Yeah, it's amazing. Let's go to crude oil, which is taking a bit of a pause. We're down $1 today. This has been a little bit. This was weak during the U.S. equity market open all the way through the opening range. That red line is the previous low. So that rally lower, we wouldn't call it a rally lower, I guess, but that move lower went right through the previous low, right down to S2. And it's amazing here how S2 really stopped this. Had a bit of a pullback past VWAP. Again, now the previous low is super strong resistance, and we're bouncing off of that between the VWAP.
And, Mike, what's interesting to me about gold or crude is with the news that came out this weekend about Saudi Arabia wanting to set prices higher. And then we had, there was some chatter about possible activity, bad actors, look for, there might be an event today. They were talking about today because of the solar eclipse, and that's very disruptive anyway. The fact that this market is down is surprising me. It really is, because I thought a lot of the news would make crude bullish at the open.
Yeah, I agree with you. It is a bit surprising. Let's look at the daily chart here. So we had this really nice rally heading into all of this kind of culmination of bad news and risk that you're talking about in the Middle East. And then on Friday, we had this kind of doji top. And then today we're seeing some follow through. So a pretty classic swing high here to the downside, but big wicks on both sides there. So there's still some indecision here.
Yeah.
On Friday, you'll remember you and I talked about which market is stronger, crude oil or nat gas, right? And it doesn't really make sense that I did that, but now it makes perfect sense. Because crude oil certainly is weaker today. Nat gas is having a pretty good day. Let me go to that daily chart. There we go. So nat gas here is up 2.5%. That's a pretty big move. Let me just zoom in on that just a little bit. There we go. But some resistance here.
Right, and the difference in prices, obviously they're priced in different amounts. But natural gas is priced so low that when we talk about strength, you have to look at it in percent terms. So crude could be up $1, but if nat gas is up 20 cents, that's a much bigger move in natural gas than the dollar in crude in terms of percentage terms. You've got this nice looking reversal pattern. However, it doesn't really come at the end of a long downtrend. It comes at a short downtrend, but you've got that bullish move, doji, and then almost an equal and opposite candle to the bullish move, putting you above the moving average. I think it's the sign, and into the cloud, right into the Ichimoku cloud. These are the first steps of a possible turnaround if it takes hold. It's got a ways to go. You got to take out previous highs, but you got to start somewhere, and crossing above a moving average and crossing into the cloud. Those are good baby steps.
I agree. I mean, you've got four really very strong resistance levels, and today we're just kind of slicing right through them. You've got, like you said, you've got the two moving averages there. That burgundy is the 126 SMA. The orange is the 21 SMA. We're breaking above the bottom of the cloud, which should be strong resistance, and that 1.8 level. So all good signs. The only kind of thing that this market is going to struggle with is that now it's in the cloud. Right. And so there is going to be selling pressure as it tries to move up. So that's going to mute this move. And it may take a while to get through the cloud, because that cloud is pretty thick. Well, it's kind of, maybe next week, it'll be able to break above that cloud. Maybe that'll be just what this market needs.
You know, what's interesting, Mike, about some of these ideas of, adaptive studies, and even with like descending triangles or ascending triangles, if the market just trades sideways, eventually it's going to break out, right? So just the fact of it breaking out could accelerate an upward move or a downward move if it's to the downside. But right now, that to break out today, wow, that's a huge move. To break out in a week, it could barely tick up at all, but that still might make the market move if somebody's more of a programmatic trader rather than somebody who looks at it on a chart.
Totally agree. Let's pick a market, Tom. Gold or Bitcoin?
Let's look at Bitcoin. I just like the idea of today's Bitcoin halving, and could some of today's movement just be on that news, right?
Right. So one of the things is that a lot of people just have a cursory knowledge of Bitcoin, right? And so they know what it is, but they really don't know how it works, how it's created, how it was created, that kind of thing. So sometimes when you hear in the news, oh, there's a Bitcoin halving, that might play some tricks on you, right? But it doesn't really have anything to do with the price. It's just how much of a commission the miners get when they create a new Bitcoin. Isn't that right? Isn't something like that?
Right. The rewards are smaller. So Bitcoin mining is really having, these computer processors solve a really complex formula, right? A mathematical equation that rewards with Bitcoins once it's solved. And kind of the race is who solves it first, right? So each Bitcoin has a solution, and, one solved, go to the next one. And it's a matter of putting the odds in your favor with your, how much server processing power you have. And basically what it's saying is, okay, instead of getting, I think it was a quarter of a Bitcoin, now you get an eighth of a Bitcoin, something like that. Maybe it's a 16th. So, same amount of time and resources and money that you put into this, because these servers take up electricity, right? They run on electricity, and they use a lot of it. You're getting half of what you used to get before today. So it's doesn't really affect the Bitcoins before that were minted before, except for the fact that, well, it just was easier to mint those new Bitcoins take more resources to make, and that kind of elevates the prices. But there's no direct mathematical relationship, and ideally, maybe there shouldn't be one at all, but that's the perception.
So, it makes sense. I seem to remember reading a couple of years ago that some of the larger miners have moved to Iceland to use geothermal, or some maybe to the southwest US where they put up their own solar farm, that kind of thing. So wow. It's getting expensive to use our grid. It's too expensive really to mine using traditional electricity and paying that bill. So they're getting creative here as the rewards get smaller.
Sure.
So today, looking at this as the daily, Tom, nice breakout. We've got a bit of a seller's wick forming up there. We were almost back to 74,000 before they started coming in, but this market was up 5,000 plus at the high.
Yeah, right now it's up 6.5%, which is nothing to sneeze at, of course. and, targeting that previous wick that we had earlier today, getting close to the Keltner bands, the tops, and quite frankly, getting close to those highs that we saw back earlier in the year. There's no, I'm not really looking to sell here, right?
Right.
It's just too bullish, I think.
So this is the, if we stay somewhere, north of where we are right now, that'll be the second or third highest close of all time today. So that, certainly you don't want to buck that trend.
Right.
All right. We haven't talked about gold yet, have we?
No, not yet.
So let's do a quick daily review here. So gold has been on this amazing uptrend since the, this is the 25th right here. And of course, Friday was a big up day for gold, closing near the high there. Today, we had continued upward pressure, but sellers have brought it right back to where we kind of finished up on Friday.
And looking at this, outside of this market is traded outside of the Keltner channel for quite a bit now, for over a week. Looking to the last time that happened, it ended outside of that Keltner channel with a doji, right? Kind of went sideways right there. Exactly. And so, the question in my mind is, if we don't see advancement, maybe tomorrow, will we be back in the Keltner bands? Probably. And will we see kind of the same behavior? The one thing that I'm worried about, Mike, is CPI coming out this week. Could that move this market? The answer is yes, but we just don't know which way.
Correct. So, yeah, we could go back. I don't have it queued up now, but we could go back and see how that last CPI affected gold. Maybe we'll take a look at that tomorrow.
Okay. Can we take a quick look? I know we have a little bit of time left. Could we take a look at the 10-year note?
Definitely.
This had a gap down and it still has not recovered that gap.
Yeah, so this, that's a pretty big gap down. We're at so the 109.5, 109 and 16/30 seconds. That was a pretty good support level. This moved right below that and got close to 109 today before buyers brought it back. So, we're still theoretically inside the Keltner there, but this market is looking pretty negative on the idea that there is not going to be a rate hike anytime soon.
Right.
I'm sorry, a rate reduction. I said rate hike.
Right.
There's not going to be a reduction in the rate.
Right. They're higher for longer, I think, is the messaging that went out last week, and this is reflecting that. That's all.
I agree. All right, Tom, thanks so much for being with me here today. Really appreciate it.
My pleasure. And we will be back at bars closing. Mike, I think you're going to co-host that with Stan Ehrlich, right?
I believe so.
Awesome.
At 3:15. Be sure to tune in.
And wear your protective gear if you're looking at the sun today.
Yes. No squinting.
Right. No squinting. Thanks,
All right,
Mike.
everybody. Have a great afternoon. Good luck in your trading. We'll see you at 3:15 at bars closing. Have a great day.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.